Test, test, test. Test, test, test. All right. Sorry about that, guys. For some reason, my internet's been having a weird trouble. And give me 1 sec. We're back. Yeah. I think it's because my router and my internet stuff, it's supposed to be behind a TV above my fireplace. And it's above my fireplace, and I have my fireplace going because I love having a fireplace going instead of like the heat on. I just like it. And I think it's like cooking the electronics so they overheat and then they turn off. At least it seems that way. So turn that off and now it's back to normal. So we'll see if it stays. But, you know, nothing's really changed, right? Simultaneous break, second 60 of the day SPY. The buyer's still present. As we've just been saying all day, like, you know, the buying is still true. And we got to switch over to real-time data. And see, this is what it looks like yesterday when the whole market's crashing out. That's what a bear market looks like on our scanner. It's very obvious. Now, if we can log in. So let's just take a look here on the 60. Boom, right? They're pretty much buying everything. Now they're up $4 from the open. So they're, you know, SPY's up 0.5%. So it's a little better now. It's just, they're taking their sweet ass time. And I'm going to be typing. I'm going to mute my mic. Just give me a minute. And I just had to restream for those of you guys in Discord too. All right, your simultaneous 60 SPY, like we said, you're going up in there, 685.97, and boom, there's your triangle. So notice the 60. This is important. Inside bar restarts price discovery, new high, new low, new high. Now what? Price has done what it was supposed to do. It made a new high. Do they stay there? True or false? That's all we care about. Because at this point, we don't know. What we can say is, how much evidence do we have? Well, the day is green, right? They'd have to change that. If you're going to have to be forced out of long positions, you'd have to flip that day to red. The 60 hasn't reversed, so you got to reverse that, right? The 30, you got to pivot machine gun. So if they are going to bring it back through, and you see on the 30 how the triangle, 3, down, up, down, up. If they're going to bring it back in, you did minimum need that 30 to kick in. So you can see this is what we call triangle they out. And it's triangle, boom, like this. They out, right? Anyone that's short, they out. They are gone. Because if you were short against this stuff. And you can see this buyer just was not that aggressive. So we'll see, do we stay up there, true or false? That's what matters to us. When we go to the Qs, you're going to see the same thing. And since broadening formations broaden, if we're above all of this stuff, right? If we turn this indicator off, if we're above all of this stuff, because broadening lines, these are true support and resistance, it would be breaking through resistance, right? That'd be a breakout. Now, if we're not, it's a rejection, which tends to be stronger than any breakout. But it's just true or false, right? Are we going to stay up there or not? So that's our main question. Now, if I had to place a bet, it's actually hard to say because we're still inside week, which means not only is this a broadening formation on the 30, but if we turn that indicator on and we just objectively go and figure out what's going on, notice, right? If we're breaking above that, which you saw it for a split right there. See how if we're breaking above that, notice how the target expands, it gets bigger. It's because broadening formations, they work as levels of reclaim. So Qs, we're simultaneously at resistance here and resistance on the shorter term triangle. If they can get above that, then it's reclaiming this much bigger range. But if they can't, then we got all these pivots, and you'll see how it automatically marks those out for us. So we can see in the previous range, we have pivot, 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 pivot. The only thing we would need to trigger that as a pivot machine gun would be a signal, right? In this case, right, this would be an inside bar signal, but any of these signals would do. It's just a matter of do they or do they not. But you can see Dow Jones, same thing, and people will say it's an SMT divergence. In reality, what it is these buyers not strong enough to take this out in the Dow, so it has to be relatively weak compared to QQQ. Relatively weak in the Dow compared to SPY. And look at SPY, see how they hit the top of the triangle? They already start coming back. This is that profit taking coming in, and this shows us potential buyer exhaustion because it's simultaneously forming a shooter, which shows us they bought it up and now they're selling it down, so profit taking. And because it's occurring where we would expect that to occur, the top of the triangle, that becomes more important. So we'll see if those reversals kick in. Now, if we go to IWM, obviously this is much stronger. So if we're going to short anything, IWM probably isn't the best short. We want stuff that would be below the day open. So what would that look like? Well, we're on the third 60 of the day. So things that would have a magnitude to take it out on the day, you know, if things were to come back, which again, at this moment, they're not. We'd need a 60 to fully change things. It would have to be stuff that's close to taking that out or has a magnitude to. The magnitude that would have a target of taking out low of day would be inside bar 2 up, 2 down rev strat, because we'd have a target of taking out the first hour's low. So what does that look like then? Do we have any of those setting up? We have 45 setting up. And then we can go to last price and look at the bigger ones and see what do these guys actually look like? You know, anything that's going to try and come back in. And things like Shark Ninja, right, that we knew were inside 60 and broke up, or things like Lululemon, right? Those could turn into that, although Lulu, right, it's pretty firm, so it's going to be hard to do it. But let's just see, is there anything at all? It's a lot of lower, yeah, a lot of lower liquidity names. So a lot of these are not inside. They're just, it's because the data on TradingView is slightly different than the very accurate data that we're getting from our exchanges here. We can see Danaher, that'd be a rev strat. And notice this would occur below the day open. So that's true. And what we can do, let's just see. B-Bio, you can see it's doing similar. And look, you got pivots on both sides. One sec. All right, sorry, I'm back. I had a phone call from a buddy. Oh, now I got a phone call from the mother. All right, give me one sec. All right, everybody. Sorry, I'm still on my phone call, but mind the flip. What you'll see, so the flip is when the new 60 opens, and that matters because the 60 determines right now what is price actually doing. And so today price is going down, but the 60, 1, 2, 3 hours in a row, they've been buying. So does that stay true or not? And we are at short-term exhaustion risk, which means we are at the top of the shorter-term broadening formation, which does not guarantee a reversal, but it's notable as far as where we're at. IWM is still stronger, and what I'm going to do is I'm just going to leave this up here so you guys can see where we have the signals breaking with full time frame continuity as this updates, and I'll hopefully be off this call shortly. I might have to get off soon though.
Simultaneous break up in tech. You can see 52%.
Oh, sorry about that. It was a longer phone call than I expected. But you can see for now, simultaneous breaks, they're still 2, 2, 2 on the 60s. You'll see the inside 30s we mentioned. Inside 30, 2, 2, 2 on the 30s. And yes, we are at shorter term exhaustion risk, so we're aware of that. But for now, again, like we said, you have to reverse to actually reverse, right? That's just how it works. Got to reverse to actually reverse. Like Crocs 322, they reversed and they're still going up. Does the scanner have failed twos? So for the sectors specifically, the failed twos are this little green bar down here. But when we're identifying and we're scanning for stuff, if we go to signal mode, what we can do is we can look for 2 down and green, right? Signals that are breaking 2 up, for example. So these would be the ones that break with full time frame continuity, which you can see we don't have much of that. Most things are just 2s to the upside confirming. But you can see RHI, for example. Oh, that was full time frame continuity down. So yeah, we don't have anything breaking full time frame continuity up anymore. Earlier in the day we did though. But yes, so we can specifically scan in the category of 2 down and green. If we go to setup mode, we can go 1, 2 down in green, these are all your potential rev strats with full time frame continuity. So like cat, potential 3 with full time frame continuity, that should happen. You've got 43 minutes. We go shell, crisp we like. So crisp, it's green, but you can see it's close to changing that. Shell and the energies. Let's see, it's still inside day. Yeah, so it's still inside day shell. But you can see, so we can pretty much scan for whatever you want. The only thing we can't do is say like 1 penny below the previous bar's high. Like we can't do that. But everything else is scannable. Now you can see intraday. So notice, remember before, right on the 60s, if we just go, let's just go communications or tech or something. So remember before on the 60s, right? 60% attack, 50% attack, 60% attack. But you'll see the downtrends were at 0%. There's like 0 to 5%, 0 to 10, 12, 13%. Now, you can see we're getting a little bit more downtrend. So the rally is weakening slightly intraday. And if we look at a 60-minute basis across the sectors, a lot of things just went scenario 1, right? SPY, utilities, real estates, industrials, healthcares, financials, energies, discretionary, materials. So things weaken up a little bit. And this matters because we still have a lot of downtrends on the day, especially in indexes. The majority of trends are down, although we have a ton of scenario 1s for next week, setting up on the inside days. So although the market's been slow, it might get even slower to the upside because, things are slightly weakening, even though we have these simultaneous breaks. So we'll have to see if that changes. But you can see for now, like I still am under the impression the back ender is going to look like this because you got the pivot machine gun. You got all these pivots. So all it takes is one guy to start taking profit and sell 100,000 shares on SPY, and it might trigger everyone to take profit. So things can go very fast when you have these pivots set up. So you just want to be aware of that, especially when you're timing signals properly at the top of the range. So you can see like SPY here, that could go rev strat. All right, Qs, that could go shooter 15 down. Dow Jones is triple inside, and then IWM already reversed. So very possible things could weaken up, but for now, the 3060s not doing too much yet. It's like watching paint dry. It is. It definitely is. How would you scalp with the strat? So it has to do with volatility. So for example, bros this morning on the 1 minute. When volatility is high, you can think of each 1 minute, right? If they're moving 3% every minute, this is like an hourly chart. So if you're going to be a scalper, and by scalp, you just mean like in and then get out real fast. You want to be on the lower time frames, of course, but you need high volatility. So how do you do that? Well, we look for long red and green bars. We look for gaps because those things are showing us that volatility is high. So like bros this morning, gaps up on earnings, 221er, boom, hit the bid, it never comes back. And the problem with scalping is this. A lot of scalpers, what they'll do is they'll get in and then they'll make this and they'll be like, all right, I'm up 2%, get me out. Wrong. You wake 2%, that's the one that might go 20%. Because if it's going 20%, it has to go 2% first. So you can see it drops 4%, 5, 6, 7, 8, 9, 10. And then the first reversal. So this is how it would look, just so you can see. This is the entry. Inside bar, add. Inside bar, add. Inside bar, add. Inside bar, add. 2 reversal, fully exit. And then you can either flip it long and try and make some of this, which is definitely doable when volatility is high. And then the next reversal down right here on the 1 minute, 2 reversal, entry. Shooter, momentum, add. 2 down, 2 up, maybe reduce or exit. But then the 222, you could get back in, low of day, then inside up, that's where you'd exit as well. And then you can see if you're a scalper, once that high volatility dies down, you'd miss all this, which is why it's better to be a scalper making winning positions on small time frames and then holding when you have a reason to do so. So if you short it in the morning, break even your stop or add, and then get out. But if you break even the stop or you reduce half instead of fully exiting down here, like imagine if we reduce half here and we entry, add, our stop break even could be here. or our in profit stop, right? Our in profit stop could be somewhere around here. So we can put an in profit stop in there and then just come back later today and see where we can cover it at the close. Or once it goes outside day, you just cover and get out, because this was the goal. Go 3. Because the goal of price at all times is to take both sides of the range. So when Bros gaps up and then goes red, it's trying to take the lows. Once it takes the lows, there it is. If we go on a 60, you'll see this much clearer, or maybe a 4 hour. See downtrend, slight high, downtrend, gap up, goes into the highs, and then downtrend back to the downside. Yeah, so you can trade whatever you want. You need volatility, because there's something that we call compartmentalization. And the way it works is this. So if we go to, let's just go to TLT, for example. So if we look at TLT and we just go to the day, we just look at this. So you can see we moved 1% in a day. That's pretty average, right? Now, if we zoom out, let's just go to like a 2-day chart so we can get some bigger bars to look at. If we zoom out, you can see how this was 4% in 2 days. So let's just say it was like 3% in 1 day. So if each day is averaging 1% and you move 3% in 1 day, that's like 3 days in 1 day, right? So we can compartmentalize and say this whole day of trading is like 3 days. Therefore, when you go to a 60-minute, you can treat each 60 like it's a day because it's moving more. So when volatility is high and things are really moving, like gold and silver, if we look at gold, let's just look at the monthly. When gold is jumping 10% a month, right? 28% in here. It's going like 10% a month. If we just zoom out and we look at, historically, the size of these monthly ranges, 4%, 4%, right? 5%. So it's like each month of price is like 2 months. So you can make twice as many trades within 1 month because you're getting double the size of the range. And this is why when you see things like SPY, when the market crash, you can see this whole quarter is 30%, or this whole month is 30%. Compared to the size of the previous ranges, each range before was like 5 to 7%. So this is 6 months of price action in 1 month. Therefore, if you go to a weekly, the weekly chart is now like a monthly chart. It's actually, the weekly chart's like a quarterly chart, moving 15% a week, which means the daily chart, notice 8% a day. Each day is a new month, because the average move before was 5% a month. Now it's 8% a day, right? Huge. So if each day is a month now, that means each 60 is like a new week. So this 60 opens, look at this. It's a 3% move in 60 minutes. That's like a whole week 6 months ago. This 60 moved 5% in an hour. So if each 60 is a week, then every 10 minutes, or let's say every 15 minutes, every 15 minutes is like a day. So each 15-minute is a new trading day to you if you're compartmentalizing properly. And by knowing the strat, we can be long and short and long and short and just go back and forth to the end of time until volatility dries up. So when we see our setups, the specific ones we look for, like the 2 down in green, when that breaks, 1%, 1%, it's like this 3% in 45 minutes, right? And that's, and then 3, 2 up and red, 3, 2, 2, boom, 2% in 15 minutes. Then inside bar add, boom, you get another 2% in 30 minutes, right? And then you cover. And then you'll see the 1, 3, 2 rev strat, boom, 2%, like an hour. So you can treat each 15 minutes like a trading day, and therefore you can make a month's worth of trades in 1 trading day. So you should be killing it, right? So when the VIX increases, and you'll see SPY, these are 0.3%. So unlike before, 1% per 15 minute, this is a third the volatility, right? And here it's a little better. It's like about half, give or take. But you can see by compartmentalizing, each of these 15 minutes, maybe, it's just like a normal 15 minute. But if the VIX were to go from It's like right now, FYI, Rev Strat SPY, that matters. Anytime we're below 685.28. However, it's setting up the 30. So once the 30 sets up, that matters, right? This is where 0DTE SPX put options. This is what we've been waiting for all freaking day, okay? So this matters, SPY. I'm just gonna draw your attention to here. But I guess to wrap up, by compartmentalizing and understanding volatility increases and decreases over time, and that price action does not change, you can make a month's worth of trades in one day on a 15 or a 5-minute basis. But you need the volatility. If you don't have volatility, you will get destroyed because you are going to be trying to go long and short in a market that is not going anywhere. Kind of like, SPY today, you could be going long today and you're doing okay, right? It's up $7, 1%. But notice that 1% move took 3 hours, right? So when volatility increases, that 1% move might take 20 minutes. And that's when you make hay. And you can think of it like if you're a farmer, you plant the crop, right? You run the machines, you do the maintenance on the machines, but you don't make any money until it starts raining, the sun starts shining, and things start growing. So when the triangles are really small, the broadening formations are like a 1% wide, volatility is lower, and you can still make hay, right? But if you're not getting much rain, you're not going to yield much on your field. Now, when volatility increases, it's like having a really good year for farming, right? You make hay while the sun's shining, or you grow much more crops when the weather's good. So when the weather is good, that's when the VIX is high. Right now, the VIX is still around 20, so it's still elevated, but our favorite is when VIX starts hitting 30, 40, 50, 60, because then you're really getting stuff going on. That's what we're looking for. And the way we find this, because obviously the SPY and all this stuff, the VIX doesn't pop up over 20 at that often. The way you find it is you look for full time frame continuity. You look for earnings, news catalysts, story names, as we call it. So like the uranium sector. This was a story name because we have all this AI stuff and we need to power it. So here's your 2 month in uraniums that we pointed out on Twitter. And since we knew it's a story name and there's a lot of attention here, the volatility is higher and it moves 100%, like, 6 months here, which also means each week, right? Each week's moving 10%. Each week is like 1 year of SPY price action. So you can trade a year worth of SPY price action in a trading week on uranium for 6 months while things firm up. And you can keep doing that, right? Each week things change. So make hay while the sun's shining. You just have to find where the market's moving. So we go to energies, full time frame continuity, it's going up. 2 year, this year traded 22%, which is the same size as last year's range, and it did that in less than 2 months. So each month is like a year the past 3 years. So each month is like a year in energies. We want to know about that all year. It's moving. It's doing something. Even if it doesn't keep going up, right? But OIH, it's up 33% this year. Or let's just do it by points. It's 100 points. Last year was 120 point range, and then 80 points, 100 points. So we've done a year's worth of price action in less than 2 months. Each month is like 6 months of price action in OIH. Therefore, when you trade the 60, each 60 is like a new day, right? In here, boom, 4%, killed it. Inside 60, boom, 2%. Reversal, boom, 2%. And then consolidation, right? We want to not get too chopped up in here. Then it gaps up. It's going to be trickier in here. And then down, 2 to reversal, boom, 3%. Right? So we can see, hopefully you guys can see how that works and how compartmentalization allows you to actually press when things work. And this is why, unlike most traders who are scared to trade, we are not. But we're not scared because we know what we want to, what we're looking for. We want high volatility, and then we trade reversals because price is moving. It's going to reverse more often. 3 minute, 5 minute, 15 hour day. With scalping, the higher time frames still matter. Like, again, if we go back to energies, did this yearly price action matter? This yearly signal, did that matter for the 5 minute guys trading? Yeah, because if you made a 5 minute position, it rallies 10%, you could just hold on to it, right? If you wanted to. But it's also, if we go to Oklo, if you're scalping the bot and you're buying Oklo this year and you're scalping, you would like to know that it's an inside year because it tells you specific conditions. Because just like last year, it was a 3-2 above 28 bucks. You would like to know that if you were trading Oklo because it blows up to 200 bucks, goes 10x nearly. You can see 600%. You would like to know that if you're scalping. So every time frame still matters. And that's another misconception people have, is thinking that because you're trading a 5-minute that the big time frames don't matter, when in reality they matter more, because without the bigger context, you don't know which direction you should be trading in. Like this week, if you don't have last week's highs on your chart, the 5-minute at last week's highs on the gap up sell right here and right here, you had no reason to think that would be a good thing to do. You also had no reason to try and hold runners down into this. The same way, by the way, short SPY, puke. Do it. We'll see. Those 60s are setting up. So the 30s right now are setting up the 60s spying cues. And again, those 30s, they matter because they're setting up a 60. So if the 60 does not break, so the 60 hasn't reversed, you got nothing. But this is the back ender we have been waiting for. So it's worth putting on some 0 DTE risk on those put options. And you can gauge magnitude to low a day. So you just want to strike above low a day. And if you really wanted to go lotto, lotto crazy style, you could do low a day strike, 596 on Qs. You could do a low a day strike, 675 on SPY, and those might go 1,000%. But here it is. Come on, boys and girls. Put the big boy pants on. Then it goes back to the signal. Yeah. Okay, so 5-minute signals from 1 hour. It breaks, it goes back to my stop loss, then goes back to the signal. If I enter, it does it again. It's very difficult to trust that. That's why we don't have wide stops and why we add to winning positions. So if we short SPY up here, we have the least amount of evidence at the top of the range. This shooter signal increases the evidence that this should work. So we have evidence, we just have the least amount at the top of the range. So let's say you're trading this and you have a max size of 10 put options on SPY. You would buy 3 or 4 of them. If it's a simultaneous break, you can go and buy all of them right away. So Qs and SPY simultaneous, Dow simultaneous, IWM 3-2 simultaneous. So I wouldn't buy all 10 right away, but you could go and buy like 4 or 5, right? If you wanted to try and do that to risk it. And it doesn't guarantee this will work, right? Which is why we start small and then we add. Because if we can know SPY, for sure it's trying to do this, since we can gauge magnitude, drawing the broadening range out, knowing where price is trying to go. Then we know as long as this 30 signal does not reverse, and we have high evidence it should not reverse. Because at the point of this being true, notice the market's starting to come back in, and most of the dailies are downtrending today, so this is a lower high during a downtrend. That's something we want to know about when the whole market does that. As it goes in our favor, we gain evidence for our positions. Therefore, if we buy 4 put options, when this 60 goes reversal in 25 minutes, or if it goes outside bar and takes this out, we can add to it as it goes in our favor. Because the further down this goes, the more these buyers are going to have to get out of this position. So you can buy 4 contracts, and then if you get a 60 signal, you can buy the other 6. And you'd be like, all right, bought my 4, I'm up 100%. I'm going to risk it all. I'm going to press the winner. I'm going to put my stop in profit or break even to my cost basis after I add. So you add to it, your stop is break even after you add. Therefore, either you make a ton of money or you don't lose anything. And if you do that 1,000 times, I can tell you, if those are the 2 options, you don't lose anything or you make a ton of money, even if you only make a ton of money 30% of the time, you're going to make a ton of money. So that's how you need to think. I'm in puts, let's pray. Amen. And I guess, well, let me show you a great example of this. Yesterday, I made about $7,000 in the morning shorting Qs. And this is how we did it. Qs became a 3-2 down 60. This was my first entry. Because at the point of this being true, SPY was a 60 reversal pivot machine gun. We know what that's going to do. Yep, womp. Right, down they go. Dow Jones was shooter 60 down. IWM was 2260 down. So guess what? Since Qs was a 3, it had to be weaker than the other ones. So I shorted the weakest one. And then when Qs did the same condition, 3-2 down day, I added to it. So since we had high evidence, I went heavy on the initial position. By the time it hit low day, I was up $1,500. I think I had 8 contracts. At low day, I added 8 more. I doubled my position size and put my stop even. And then it goes whomp, closes out. And at that point, since the signal was done, I reduced half my position, over 160% gain on, it was like a $4,000 or $5,000 position I had on for Friday options. I reduced half, and at that point, my break-even stop, it would have been here initially. After reducing half, my break-even stop goes way, way up high up here. So I could risk the rest of it, which I held into today. Or you could just fully exit and be like, yep, dust the hands off. I'm going to go, do whatever I want to do. But that's what happened yesterday. So it's entry, add. It's not entry as big as possible and then lose a lot like most ICT guys are doing. And a lot of people on Twitter do it that way. It is entry, add. And if you want to tighten those stops up, what you have to do is you need to trade at the tops and bottoms of broadening formations. But that requires some faith. Something me and my friend were talking about the other day. Because if you're going to short Qs at the top of this thing, right? This isn't the biggest one. So it's pretty easy to think, well, if Qs does reverse and stays good, no 30-minute reversal against, possibly, right, it drops 2%. But the ones that, the really big ones, the ones you feel like when you see them, you feel like they're not going to work, like this. It takes a lot of faith to go inside 1 minute down and short it right here. But you can have a 2-point stop because we know where we're trying to enter. We're trying to enter at the top of this broadening range. And then you also know where to cover. You're covering down here. So if you can start using those broadening formations properly, you can really tighten up that risk. And if you do it that way, you could lose 80 times in a row and make it all back in 2 trades. Which, if you're a new trader, that's a beautiful thing to hear because you don't have to be right every time. In fact, I might be wrong on this reversal here. That's okay though, right? Might be like I might lose a couple $100 or something, and I haven't added to it yet. So, that's where we're at. Sorry about that. Okay, but what I was saying. Sorry, I was muted. I'm gonna have to get going soon. Sadly, I just don't have much time today. But so the 30 hit its target. And again, like we said, the whole goal of this is to set up a 60. So we still have 17 minutes on that 30 to see if that seller wants to come back. And if they're going to come back, it'll be on a 5-minute basis. But since we're right at the top of the triangle, unless it's a breakout of this, this is not the place to buy, right? The place to buy this morning was when we started coming back in and we said, you know, we have all this range, we might come back through it, but we don't have as much evidence on the upside as we do on the downside. So, or at least, you know, for indexes specifically, you know, different sectors like utilities, materials, that type of stuff, there's a little more evidence. So the time to buy is not right now, which is why if we go smaller on this initial entry, we can risk more. You can go short and you can risk high a day, which is a 1-point stop. We don't like to do that. We like 20-cent stops. So we can risk a little more if we're smaller. If you're too big, then you're not gonna be able to do that. But for now, it's still reversal. Price still reversed. It did reject that, but it has not reversed back up. It would have to take out high a day. So we're kind of in this limbo because you can see a lot of twos are down. A lot of those twos down are green across the market. All these green bars under these 50%, 70% going down, but green. So if we go click in here, we look at all these twos down. You can see in financials, 2 down in green, 40 of those financials are trying to reject it. So if we just like pull up any of these like COF, you see it rejects it as a 3. So we're seeing something like that across the market, but that doesn't mean the seller's not here. It just means they sold and they didn't keep selling. So the question still is on the 60. The 60 is a major signal. We need to reverse the 60 if we're going to get this thing to kick in. And that's not going to be for another 15 minutes if they're going to do it. So that, you know, to leave you with, you know, the rest of the day, if we're going to get the back ender to the downside, the highs up here, this is the resistance that we'd be playing against. If it's going to expand, like you can see right now, it's a 2 going 3. If it's going to expand and try and do something like last Friday, where they went on a ripper, you would have to see them above that. The only way they can go higher is if they're staying above that. So right now, I would prefer to have the short against the high a day just because of where we're at in the broadening formation, but we just don't have evidence of them selling right now. It's doji. So the next 60 flip, if this closes 2 up in red, that's enough to say, you know, we could definitely go 2-2 reversal because the seller showed up, but we need to see the 60 reverse if we're going to get the move we're looking for. The 60 reverse, no. This is not a reversal. Because so you have to understand a 2 is a trend. So we can be 2 up and red. This is still a trend to the upside, right? What's happening during 2 up and red is this. During an uptrend, you have simultaneously higher highs, higher lows, higher highs, higher lows. So notice there's places in here where the price is going down while it's trending up. In here, it's going down in here. So what that looks like is 2 up and red. It's going down, the seller's more aggressive, but it's still trending up. So in order to get a reversal, we need to see an uptrend turn into a downtrend, right? So it has to reverse, or else it's just an uptrend where the seller's a little more aggressive. So when we look at SPY, the goal of this 30 was to try and set up the 60. They broke down, downtrend, but the buyer's more aggressive right now. So it's conflicted. It's downtrending, but the buyer's more aggressive. Either that becomes a 3, right? Stopping us out, or it's still a downtrend and we make, you know, slight lower highs, slight lower lows like this as a small triangle. If it goes like 1 minute, you might see it like this, right? This would create the lower high during the 30 downtrend if they're going to do it. At this point, they're not, right? The 30 is green. So I don't know if I was muted when I said it, but if you're a 0 DTE guy, when that flips green, it's like, get out, didn't work. Ticks down, comes back, get out. If you are small, you know, small position guy and you're trying to add to this, you could put a stop at highs and risk that. But at the point this is green, we have no evidence of selling because you can't be above the open and have a seller in there. That's not how it works. So the question just becomes, what's the next two? What will it negate, create, or do? If the 30 were to close like this, in 12 minutes, they still have a lot of time on this 30. If it were to close like this, the next two would be up. What would that do? It would confirm the uptrend on the 60s. If the 60 were to close two up in red and closer to going down, the next two would be down. It would be a reversal. It would change the day. The month and week are already slightly red. And we would prefer it because we're at the top of the broadening formation. So we're still in this period of like we're fighting back and forth. The seller sold it down. The buyers bought it up. Now what? I really prefer to get the back ender this week. I just don't know. They might not do it until next week on Monday or something. You can see financials are still firm. Healthcare is still haven't reversed. Staples are still good. Real estates are still going up. Utilities are still going up. Tech still grinding. Semis grinding. Energies, XOP is a little firmer. OIH, you can see is still going up as well. So for now, you can see none of those 60s were able to get reversed. Look on the 60 basis, we were unable to reverse them, but we saw profit taking across a lot of sectors. It just didn't change anything. And you can see the 15 hammer changes the trend to up during the 2 down 60. So this is now, the last 10 minutes of the 30. It's trying to become a 3 on the 30 with that. But I would just much prefer the slight higher high and send them lower. If we go to the futures, look at the broadening formation here that we closed out of. Futures look slightly different. Turn this off. You see, this was the triangle. If we go to the 30, you can see the 3 here, 2, 2, 1, 2, closed out. And then we tried to come back in, but the buyers supported it. So in order for us to get them back in, we got to get below all this stuff. We got to take these buyers into the wrong position, or the losing position. The Utes, 30's up. They're still just buying the Utes this morning. Morning, sorry. They started buying in the morning and they're still buying. Put it that way. Same with the materials. You can see how that broadening formation with high evidence, the full time frame continuity. Anytime full time frame continuity is true, that's when you know it's happening. We go to oh, getting blown up on the texts. You can see this is a great example of those XLBs, how the inside 15, notice how when that broke, all time frames were green and the buying is just the buying. Similar to the Utes, when they broke the 15ers and the 30s this morning, for sure going up and then profit taking and then going up. You see the difference in SPY, for sure selling, for sure selling, for sure selling, and then this is profit taking / conflict, right? And conflict is where these broadening formations, they start and then they grow. You can see buying and then the conflict creates this, which is the conflict, consolidates, and it kicks in here, which is that big puke yesterday. And you can see the level at which we would kick it in would be 68173. So for now, we would have to see that if they're going to change anything. You see how IWM is stronger because it's closer to actually kicking into it. Although every time they were close to doing it, they sold it. CRISPR still above last week's highs. We got 2.5 hours left in the trading day. Wow, XOM buyer exhaustion. That's definitely interesting, maybe for next week. Energies are still pretty firm though. The 15-minute simultaneous breaks on indexes have been money all day. Yeah, they could be better though. If we can kick this thing out of conflict into continuity in our favor, that's when things get real fun. But for now, Doji at high a day. And you can see how they've just been alternating all year to start the year. New high, new low, new high, new low, new high. Would love to see a new low. I just don't know if we're going to get it today. Got any more of them broadening formations? That's good. And the weaker stuff would be like Netflix. You can see it's forming the shooter 60, which could definitely take that out and kick it into full time frame continuity like they did back in here. I'm gonna make some something to eat while we're just kind of sitting here. The Bulls have no balls. Yeah, they don't. Not this year. That's for sure. Power hour may be the move. Yeah, I mean, you said that in the first hour, or like a back ender, is what this is looking like. The question is, which way are they going to go? Are we going to have the power hour trying to go outside day, or are we going to see 333 broadening, broadening, broadening? That's my question. For now, you can see we're 3-1 4 hour. This will be the futures. ES is going to look slightly different, but I look at the US 500. It's both showing. It's showing the same condition though. The Nasdaq, but US 100 looks similar. 331. So that right there is the question. And the level would be Q's weekly open right here. So if they're going to expand and really try and blow things up, it would have to be above that. And if they're not, it's going to be below that, and you'd need a signal. For now, the 30s are closer to a reversal up on the Qs and the SPY technically, but it's doji, 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 doji. So we'll see. CRISPR, the RevStrat 60 CRISPR. CRISPR, anytime you're above 53.64, it's confirming the weekly. 2-2 reversal. Above last week's highs, 53.00. And it did have earnings today. We just opened the new 60s, and you can see, did the 60 set anything up? I'm going to turn this off. Doji, nothing. So it's downtrend, reversal, reversal, doji, inside. So, new 60s open up. 90% of the market opens as a scenario 1. Utilities is still the strongest sector. It's not changed all day. And all week, actually. This is timeframe continuity TFO, the indicator. You turn on TFC highlight. And you can see it will highlight whenever it's full time from continuity. You can also set alerts. If you have stocks you're watching and you're like, I want to buy it when it's going up, set the alerts. Qs, 2-2 reversal up in tech, 30s. IWM's closer to doing that too. SPY's a little closer to doing that as well. So closer, just back to grinding at the highs. Unless we get a 60 going, this is just chopping them up. Since IWM took the week up, is it stronger than others? It's mostly dependent on continuity. But you would say there's two ways of analysis, right? There's continuity, who's more aggressive, buyer or seller, and then there's trend. So SPY is downtrending today, but it's green. IWM is not downtrending today, therefore it's stronger than SPY. IWM this week is 2 up. Therefore, it's stronger than Q's, which is not going up this week. It's inside bar. So by trend, we can see who's strong and weak. And then by continuity, we can say IWM is closer to changing the week open to green than something like SPY or Q's, albeit very, very slightly, right? So if we look at utilities, is this stronger than IWM? Yep, right? It's going up, but look at how far it is from the open. So when a 60 signal or when any signal occurs, like this outside signal, outside bar, when that breaks out, you have more evidence that utility should go 1, 2, 3, 4% than you would on the same outside bar, the same condition nearly on IWM to the upside. Because IWM this week is not as strong as utilities because it's not as far from the open. The biggest positions are very far from the open. So like someone just mentioned SNDK this morning. Inside 30 breaks. This week, you can see it's up 10%. If we mark that out, this 30 breaks above the week open. At that point, it was up, 4%. Then they just keep buying because this week above the weekly open, the buyer's more aggressive. And then once it's way up here, right, that's got to be stronger than SPY. It's up 7%. SPY is up 0.5%, right? But they're doing the same thing. We do have a seller on the new 60 showing up slightly, but you're inside. So unless you go 260s, not much to chat about. What we can say, though, is the high of day after the 30 reversal. Technically, the 30 has not reversed. It's still making lower highs, and you had a high day. So, right? We'll see. Do you get the 2-2 to back ender them? That's what we want. Wow, this is some of the slowest stuff, but Dow Jones, IWM break down, Qs, 2 going 3, and SPY maybe breaks down. So you got a little bit of selling showing up, but is that going to be enough? So far, not yet, right? We'd have to change these daily continuity levels, and there's just not much. These indexes, man, they're not doing much. Healthcare's breaks down, materials breaks, industrials breaks, staples they're still buying, energy is still buying. So we're gonna see, and the stats are changing a little bit. We go look at the 60s. Notice now we're gonna have some overtaking. So we go communications. You see they cross over. We got more downtrends than uptrends now. So things are trying to change. You can see all day, right? Trending up, trending up, trending up, trending up, and then boom, everything changed there. So we're seeing that across some things. Industrials, look at that. Boom, boom, right? So you got industrial selling, at least during this 60, we got 36 minutes left. So it's pretty late into the 60 at this point. You'll see healthcares as well, right? They're buying them all morning, and now they're starting to sell them off. About 60% of healthcares. Same with the discretionary, buying them pretty much all morning, and now it's starting to get overtaken a bit. So there's a little bit of selling going on, but not enough, and not fast enough. That's for sure. Just slow stuff. Now, if we go to the futures, this is what we're dealing with. Here's your 3. Right, this is the NASDAQ, US 100, same difference. US 500 still inside. The Dow Jones, look at this, 3, 3, 2 up in red. So Dow Jones is a little weaker in those industrials, with all those industrials kicking into downtrends. It's one of the weakest sectors, second to what, healthcare's, and Dow Jones has a lot of healthcare's in it. So a little bit of kicking back in. The question is you know, is that going to be sustained, or are these little triangles going to kick back in? They would have to stay out of this stuff, and you'd have to get the rest of the market moving. Individual tickers, yeah, that's relatively simple. So like right now, right, look at this. We got market coming in. What do we short? Well, we short things full time from continuity, because that's where actual algorithmic selling is taking place. We look for things that are going 2 down after they were going up, and that would be things that are not green on the day. So this would be where the real selling's happening. Apple, AXP, Fox, GPN. So with industrials being relatively weak, you see GPN, so let's just say 2260, still inside day, so that's the only issue here. It is a 2 going 3 week though, so maybe if industrials were to kick in, this 2260 causes it to break down below 6780 something. So that'd be an example of, you know, something you can look for. Now, since we're so late into the day, we want the stuff that's already going. So here's the top of the list. We want stuff that's less than, let's say, like 5%. Because that way, it'd be -5. Let's just say stuff that's like down 3% or more. So these would be your weakest names: MasterCard, Visa, Apple, right? That type of stuff. So these guys, you can see they already reversed. So while the market's going up, these guys, the sellers kicked in again. MasterCard and Visa inside 60 down. And you can see we missed out on trying to play that inside 60. But if we just went like this and showed things that are down on the day, at least 2% or more, those 60s show up. You know, if we were actively scanning just for that, the 60s will show up because on the previous 60, it was an inside bar. So you can scan and find that. And if we go to any of the 2s up, you see AXP and Apple were 2 up on the previous. So Apple is very slightly, you don't got much to come back through. Then AXP 2-2, and you got all this to come back through. So this would be where we can say it's definitively going lower because everything's red. So just like in here, reversal, and then you can see they take them out. In this case, it was a big 3 at the end of the day. Then reversal here, they're trying to take them out to the downside in AXP. Now, overall in the market, Dow, IBM, that's really it. So half of them reverse, SPY and Qs, nothing. So we're still... You want the whole market doing the same thing, and that's when you're going to get big moves. If we go back to those sectors, You see they're still buying energy, still buying some Utes, but you definitely have more 2s down for another 33 minutes, and then we'll have to see. If you look at the 60s, notice all the inside bars here. So these inside bars will be the signals going into 12:30 in a half hour that would cause more movement, because inside bars are what caused the movement. So you can see when you have, if we go to like utilities, for example, utilities, they form these inside bars and then they break. Now, in this case, we didn't have much here on the 60 because they've just been really buying these names. Let's see if we had, let me think, in discretionary, I think is where we'd probably see them showing up, or industrials. So you can see industrials, we still have 42% doing nothing. In real estate, you have 71% of them inside still on the day. Discretionary, you got 42%. So the fact that they're forming so many inside bars in here is why things are a bit slower today outside of the strongest stuff, right? Energies today, utilities today. So all these inside bars on the 60, that will matter as we get to 12:30, because we'll have half of the Qs and half of the SPY breaking a 2 up or down. And then all of these, healthcare's, industrials, real estate's, tech, going into Monday morning, if they were to close this way, these would all be of interest for us Monday morning, because inside bars start the new price discovery. Now, you can see if we go to industrials, that's setting up. So at best, this inside 60 might take out, the daily open, but still such an inside day. It's just, they buy it a little bit and they profit take, and that's kind of all they did. And this is why when we got in the morning and we were like, today it might just be kind of a chop fest. It was. And it's because we blew out. If we went to yesterday, which we can do with our scanner, it's a beautiful thing. If we go to yesterday's action, look at yesterday. What happened yesterday? Blew out all the inside bars. Healthcare's had 17% inside bars. Everything else is like 5%. And where is it? You can see it. I'm not sure what updated here. I think for some reason it just re-updated to today's. Let's see. Yeah, but this was yesterday's action. So you can see they blew out all the inside bars down, and for some reason it keeps flipping back and forth. I might have to reach out to the devs and make sure something's not going wrong here, or something's going wrong. I don't know what it is, but you saw it yesterday. We had no inside bars. So today, which I think this is the data from today. Today, what does the market do? It forms the inside bars because price, it moves and then it forms equilibrium. They agree on price, and then it moves and then they form equilibrium. They agree on price, and it's just over and over, because you're either trending or you're consolidating or rejecting a trend. So if we just go and look, we can see how that happens. So we'll just start wherever. Inside bar, trend, 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 inside bar, downtrend, right, uptrend, and then this technically was a 4-hour inside bar. Those higher time frame inside bars are where you get this choppy, like nothing's really working. And then trend, 4-hour trend. So see how this trend was much more powerful. It was a 4-hour consolidation, right? But then you'll see they go all the way up, and then they agree on prices here. Inside bar, and then they test the lows, test the highs, and then inside bar again, they agree on prices here. Downtrend, gap up, they sell it, and then here's another 4-hour inside bar. Sideways, chop, chop, chop. And then boom, there's your new trend. And yesterday, inside bar, new trend to sell it, then goes down, and then it goes up. So the trend right now, or the broadening, the price discovery we see, it goes inside, and then you'll notice it restarts. So if we turn on the indicator, inside, new high, rejection, new low, rejection, new high. And then if they form the inside bar, they would agree on prices a little higher than yesterday. But if it breaks down, it's rejecting and it's trying to go to the other side of it, which is why we prefer, like we don't want to buy at the top of price discovery. We want to buy down here, sell up here, which is why we haven't done anything. No one's willing to buy it up here on the SPY. But if we go to the Qs, the other thing that shows price discovery is the threes. So you can see 3, then 1, new high, new low, 3, new low, new high, and then it's just trending up. And then up here, rejection, they're trying to sell it back through this range. And if we go back, look at those 60s, we do have the evidence for that at this point. However, it's not like market crash. Energies are still up, utilities are still up. But we have the majority of 2s in our favor to the downside, at least across the market. That doesn't guarantee anything just because it's still not, it's not the whole market. We want the whole market doing stuff, and it's not yet. And if we go to the weekly, the reason this week has been such, everyone's getting destroyed this week, inside bar, right? You can see the price discovery. Look at this. Inside bar, they restarted. Test the highs, test the lows, inside bar, right? The slight lower low comes back in. Then a new 3 forms, and this is a much bigger consolidation, this 3. So they test the highs, test the lows, and then lower highs, higher lows. Higher highs, lower lows, higher highs, lower lows, inside bar, restarting price discovery. So we can draw this out. And what this is an outside bar, inside bar, which means next week, since outside bars and inside bars are 3-1-2s, we can play the inside week, right? Either side, the lows of it or the highs of it as a signal. And my preference would be, can we take the lows out? Because we want to go back through a range instead of right into all-time highs. But either side of that would get our attention. But that's with that inside week, you can expect equilibrium or a higher time from inside bars, like the 4-hour, the 60-minute, the sub, or what would we say? The, not the higher time frame, but the lower time frames, you can expect consolidation because the higher time frame's consolidating. So what is it doing? Boom, boom, boom. Right? And you can see the broadening formation, it's getting bigger, and then stuck in the middle. Then new high, new low, and it expands the broadening formation down. And then you'll see they restart. They agree on prices here, and then it's like boom, 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 boom. Really tight stuff, right? They just keep going back and forth. And that's why this week has just been more tricky versus when you're trading during a trending week like last week. That was a lot easier to trade both ways. If you look at last week's action, you're going to see how big the price discovery actually got. New highs, all the way new lows, and then the reversal comes all the way back into the range and closes. So that's why it's trickier this week. Also why next week is, that's the week we are interested in, because on a weekly basis, we don't have a ton of inside bars, but we have enough, right? We know Qs and tech and semis are all inside, which tells us to be watching that stuff. Notice, so Mike L, notice snow is inside week, inside 60. It's also a 2-down month, so they're just agreeing on prices here. It's tight stuff. But you can see how price works, right? Consolidate, and then boom. And then all of this is consolidation, boom. Right? And then technically, all of this is 4-hour inside, and then boom. And then it goes inside here. So it's just constantly big move, consolidate, which is a broadening formation, and then boom, boom, gets bigger, and then consolidate, and gets bigger, and that's pretty much all it's doing. So if we go intraday, during these types of markets, price reverses way more often. So the scalpers, you get a little bit more action. But you can see outside bar, and then it goes inside here. If we look at the price discovery of this, it's going to load for some reason. There it is. You can see in here, inside bar goes up, and then back to inside, goes up, and then 3 new lows, new highs, new lows. And then we get 222, which makes a lower high, the 222. Further lows, because it continued the downtrend here with a lower high. And you'll notice we take both sides after this inside bar. It goes new highs and then new lows. Then inside bar again, test the lows, test the highs. Inside bar again, test the highs, back to test the lows. So when you get the inside bar, it gives you an idea of what's happening and where that equilibrium is. Because what it is price moves, and then buyers and sellers are like, okay, we agree on prices here, so we're just going to keep transacting here. They're not willing to buy at higher prices. They're not willing to sell at lower prices. They agree. Buyers and sellers agreed. That's what the market was made, so that price goes to where it's supposed to be, and then we agree on prices until information changes. And then once information changes, right, that's when volatility starts increasing, testing both sides. And then they agree. They consolidate again, and it restarts price discovery. So if you want to see like really big examples of this, Boeing, inside, they agree. And then all of these bars are still inside this bar. They've agreed on prices in Boeing since 2021. It's now 2026. So you can see, right? 3, new high, new low to the penny, agree on prices. So price discovery tested the highs and the lows until they agreed on price, and then that was it. What that does, though, is on a monthly chart, it begins new price discovery many times. So you'll see in here the new highs, the new lows. You'll see the higher lows, the higher highs, they come back in, and then here they get stuck in the middle. Testing the highs, testing the lows, testing the highs, testing the lows. Inside bar, agree on prices, test the highs, test the lows. Failed to make the new highs, and then 3, so they made new lows and they start coming back in, agreed on prices, test the highs, test the lows, test the highs, agree on prices. So you go to IWM, notice it's inside month. So what could we expect during this inside month? Broadening formations, right? We're just going to see them testing both sides of the range as the range increases in size. So you'll see it's tight, destroyed, right? Your stops are, you're just killed. Then it finally gets big enough. Test the highs, test the lows, boom, test the highs, comes back in, trying to test the lows, and then inside day, they agree on prices here, right in the middle of the range. So we can see these 2 weeks are a broadening formation to this week, and these 2 weeks are stuck inside the previous month's range, the previous 4 weeks of trading. So we have higher lows and lower highs. Then what? Days like today, you know, if you want to practice seeing this stuff, what you do is remember 222s occur. So 2 up, 2 down, 2 up, that does happen. So not every reversal is going to work, but you can see where the range starts, this 3. Then 1. Test the highs. They tried to test the lows, didn't work. Sellers weren't strong enough. Test the highs again. And then reversal, you can see they're trying to test these lows if the sellers are strong enough to do so with a 2-2 reversal. Yeah, the market is at its most vulnerable and people agree. So partially true. The market's at its most vulnerable when everyone just agreed on prices and then we're trading above or below where they agreed. Because if we're above where we agreed on price, if me and you agreed, hey, Tesla's worth $100, we shake hands. And then Tesla's trading at 120. We have a few options. Well, Tesla's at 120 and we agreed it's worth 100. I should be selling that and taking my profit because it's overpriced. The other option, it's a breakout, right? And if it's a breakout, you get stuff like, let me see, gold, right? And this is why gold moved up so hard. Look at this. Inside bar, they agree on price, and then boom. Gold is not worth as much as it's supposed to be. They're buying and they're taking the offer. Agree on price, boom, gold is worth more. Agree on price. Agree on price. They did it for 3 months. They agreed, and then boom. They agree, boom. And then they agreed here. So everyone's like, gold is way too high. It's like, nope, you guys agreed on the price here this month. And we know that for sure. Even if you don't know that, we know that. That's what's going on this month. They're agreeing. The buyer's more aggressive, so they're willing to buy this, but they're agreeing on prices here. So the inside bars during high volatility show you, it's like it goes up and it's like, yep, this is now how much gold is actually worth. We have all market participation groups have agreed, right? And then it goes higher and then they agree. It goes higher, they agree. So when you're above the agreement, until you get a new inside bar to form that next equilibrium or next agreement on what gold's worth, you're at risk that it comes back because we know price takes out both sides of a range. So if we go on SPY and we look at the 4 hour, they agreed on prices here inside 4 hour. So it goes up, starts coming back in. That's the risk. And when this happens, destruction happens. This is where people get destroyed. Because the buyers buy and then the sellers sell at the same time. There's both at the same time. Like yesterday, people were getting blown out trying to buy this and the whole community was shorting this. So both things are happening at the same time. So the inside bar, it's like the calm before the storm, right? Like this, look at inside bar, 8 cents higher. So a buyer went in there and was like, yeah, I'm buying SPY here. And then boom, $10 lower, destroyed. And that happens all the time. If we just go to the radar watch list, there's probably 1.3s that are coming off of that today. That's one of the things we look for. So here's some of them. ELV was on the radar, I believe. Oh, I forgot we're on, what? Oh, we're on a 60 minute. But we'll go to ELV 60. Right? Agreed, agreed. This is like a 4 hour inside bar, but inside bar and then ticks down, boom, takes them out. And this is how risk reward, you know, if you're trying to calculate that, this is one of the best ways to do it because you're doing it with how price works instead of doing it at random places. Because the other way you can think of this is like, if we know they're buying gold, right? Because the year's green, we know they're buying gold. And you'll see they agreed on prices here and then they took the offer. But if we know that, then anytime there's a weekly inside bar, that's where they agreed. That's the best place where we're going to start playing. And if we're below it, that's when price is cheap. Because if we agreed, my Tesla that's sitting out in the parking lot is worth 40 grand. And then I come to you and I'm like, I really need to get rid of it. I'm willing to give it to you for 35. You'd be like, oh, it's cheap, right? So you can define if it's cheap or not. Because the inside bar shows you where they agreed on price. Below that, it's cheap. So if that's true, we want to see the slight lower low, buy it when it's cheap using a signal, and then boom, off to the races you go. And that's all the broadening formation is. You're buying cheap, selling expensive. But you can see like this inside bar, they agree on price. And then where they agreed on price, the buyers are taking the offer. They're willing to pay this. They agreed on that. They're willing to buy it there. And up they go. So you can see, if we look at gold, the reason this volatility was so crazy on the daily is look at this. The last place they agreed on price was here. Agreed on price, highs, lows, it's cheap down here. Boom. All the way up here. Notice, while it's all the way up here, where did they last agree on price? 41.12 or 412 bucks. It's at 500. So what does it do? Comes back towards where they agreed on price. And that only occurs though. That only occurs when you actually have selling and reversals and it's actually reversing. Then they drop it all the way down and then boom, this is now inside month. We can note they're agreeing on prices higher than last time. And that's been the trend for the past 3 years on gold. If we miss the initial reversal, but price continues the following hour, can you show us what you would do to get in? So the way it works for us, other traders do this differently, like T-Trades. But the way it works for us is once the signal's done, man. Like if I tell you NVIDIA reversed last year, and then you come in this year and you try and buy it, I'd be like, dude, you missed it. It was last year. And then your next question would be, well, what am I supposed to do then? Well, find the stuff reversing this year, like the energy sector. Did that reverse this year? Yeah, right there, 16%. So signals only last as long as they're in force. So continuation is only for adding. You only add on continuations because the signal creates the winning position. Like, look at this. 3, test the highs, test the lows, agree on prices. Boom, there's your inside bar signal. Add, goes up, starts coming back in, reduce or exit. Right? Because if you have a system of creating winning positions and then getting more, the way it works is you can have this same setup every time, entry, and you're in at the break of that. And then if it keeps going, add, reversal, get out right there. And if you do that 100 times in a row into full time frame continuity, like the materials this morning, you will get the one that just keeps going. But you have to have the system to do it. And the strat just makes it simpler. Because it's like, it was going down, and then it reversed, and then it kept going, and that's it. It doesn't have to be any more complicated than that. Now, there's different ways that continuations occur. So like inside bar goes up, they agree on price, and then we get a 2 up, 2 down, 2 up continuation. This is one of the ways price continues. So a 2-2 reversal is one of the ways it reverses. A 2-2-2, which is a 2-2 reversal after a 2-2 reversal, is one of the ways price continues. So both of those things are true at the same time. So if you're in here, goes inside bar, if you tried to add to it, it stops you out of your ad, that's fine. 2-2 down, maybe you reduce some of your trade. 2-2 back up, get back in, get more. Because they agreed on prices here and you bought it, ideally you would buy it cheap below this inside bar. But they agree on prices at higher prices, so you're good down here. They agree on higher prices and then it keeps going, 2-2-2. So we can add on inside bar signals, we can add on 2-2-2s, but we must enter on reversals ideally. Even if you're trying to trade a monthly continuation, you can enter on a weekly reversal, right? That's one of the ways we would do that. Because if this is the monthly, let's say, so let's say we go something like this, right? This is a daily or weekly reversal. So if we zoomed in on a weekly basis, it looks like this. There's your signal. So if we go to SPY, for example, look at this. 2-2 reversal 15 creates a winning position. Price never comes back. At best, it was 30 cents away from your entry. 2-2-2 continuation to add. Boom. Then they agree on prices lower. You're good. We agreed on lower prices. You sold higher. They agreed lower. That's the winning position. Like, you're good to go. Then it becomes expensive here and they sell it back down. And then it comes back up, expensive again, and they sell it back down. And you can see at this point, we've pretty much just stayed where they agreed on prices right here. So if you short it up there, you're good. If you're swinging for the fences on the big stuff. But to fully answer your question, if this is the 60-minute and you miss this, how would you add to it? Well, the 30-minute would look like this on this 60-minute, right? So we can't really just enter into the recent highs. What we have to wait for is the next 30, the next 60 open, goes red, and maybe we get an inside 30-minute signal to cause it to continue here on the second 30 of the new 60. So this would look like comes in, it doesn't reverse, inside bar breaks higher, boom, keeps going. You see? So if we look at SPY on the day, the same thing's true with the 2 down in green day. Goes down first, reversal, comes the other way. And this is why we don't want to enter at yesterday's lows, like we were saying this morning. It breaks down, we're like, yeah, it's continuing, but we don't really want to enter there. And if you do, you have to have a tight stop because you're selling into recent, like they already sold yesterday. They're already short. The next thing people do when they're already short is they exit their short. So the second it starts coming back a little bit, they're just like, get me out, get me out. Then you stop them out. But let's say we go to the 60 on SPY. And again, this is not the best action. I would much rather just go to SMDK to show you like, this is what prices, this is why we need volatility. But here, 2260, okay? How are we going to enter the continuations here? Well, if we go to like a 5-minute, this is the next 60. Inside 5-minute continuation, there's your signal, you're in. That's it. If that didn't work, you lose $3, right? Which on SMDK, it's 0.5%. It's not that bad. But it could also look like this, right? 2 down, 2 up to get in and cause it to continue. Or the 2 down, 1, 2 up to get in and cause it to continue. The key is just understanding how does price reverse. Because if it's going to continue higher, we need a 5-minute signal, reversal or signal. That's going to make that happen. Because it can't happen any other way. So like utilities today, 3215, we picked up that the utilities were definitely going higher. How do we get into all this stuff, right? Well, it's really going. It's a 15-minute. So what do we look for? Red bars, 2-2 reversal, boom, you're in. Inside bar, when it goes below that, they agreed on price here. It went below that. That's cheap. We get in. Goes down, reversal, get in. 3, reversal, get in. Slightly red, right? Try and get in, didn't work. We're not going to cry about it. 2-2 reversal down. 2-2 back up, get in. Inside bar, they agree on prices. Breaks, get in. Slightly red, try and get in, right? All you're waiting for is let people get short, and then I'm going to go against them because they're wrong. Because if this is what algorithmic buying looks like above all opens, the month, week, day, and 60, if you're shorting during that, you're just wrong. Because at the point of continuity up being true, across the month, week, day, and 60-minute, you're just flat out incorrect unless the 60 changes. But that open was here. So by the time you're trying to buy this, if it's up here already, it's almost like it's probably not coming back to the here, right? It's nowhere near. And then the new 60s open. You see corrective activity here, and then boom. Right? And now not everyone works, which is why we take more than one trade. Most people take one trade. We don't do that. You can get down in here, 2-2 reversal goes up a little, doesn't work. Okay, so be it. But eventually the range gets bigger. Right? Gets down in here, inside signal. Boom, sends it into the 60. And then you'll see all of this conflict mess until they finally start changing it here. But it's just a mess today. A big old mess. In days like today, you know, they lull you to sleep, and then like it could be the last 30 minutes of the day. Like in 4 minutes, they could go inside 60 down SPY. Dow already reversed, IWM is already reversed, and then Qs is 2 up in red. We could see Qs and SPY reverse, down IWM, break a continuation, then boom, everything changes in 3 minutes. So it's all about conditions. Does that make sense? I know that was a lot, but you can always just go back and watch it. And it's really, if we're just going to simplify it down, you know, if it's going to continue, you just have to have a lower time frame somewhere in here. It's hard to just buy it here without a tight stop, because we know price can go like this, right? And you don't want to buy it here and put a stop here, because that's the last thing you should be doing. You should be buying here with a tight stop like this. The second that's red, you get in a little trouble potentially. I know we're getting lulled to sleep here, guys, but in 1 minute, the 60 flip occurs. And the reason the 60 flip is important, and I don't know if I look disgusting. I didn't shower last night. But I'm going to turn the camera on for this one. Let's see. I guess maybe we'll just draw it out. I feel like that might be better. Easier to see. The reason it's important is because trading algorithms trade 70% of volume on US markets. And they have to be told 4 things. Number 1, what are you going to trade? So you're going to trade the SPY. Are you going to trade QQQ? Are you going to trade VIX, right? What is your algorithm going to trade? 2, buy or sell. And then 3, how are you going to buy or sell? Aggressive or non-aggressive? So like, are you going to be willing to buy and just keep buying more? Or are you only willing to sit on the bid where price kind of just goes like this, right? And then 4, when to buy or sell. So the clock, right? The time you're going to do that. Because this is true, and we build algorithms, this is true. You have to tell it what are you gonna trade. You give it a basket of stocks. You have to tell it how it's gonna buy or sell and when it's gonna do that based on reversals. Those algorithms, it's all based on time. So every day, every 60 minutes, every week, every month, every quarter, every year, things change. Like notice, it opens right on the new 60. It pops up 60 cents in like 30 seconds. What's going on? Let's go like a 5-second chart, and we'll show you the intraday continuity, because this will give you a good idea of what's been going on today. Look at this. The new 60 opens. This is a 5-second chart. Inside bar down, boom, rev strat. What did they just do? The algorithm's turned on right at the new 60 open. So the people who are like, oh, the macro that occurs at 9:12.5 a.m. in the morning on a Tuesday and blah, blah, blah. They're not incorrect in what they're saying, but their methodology is not as concrete, because they don't realize that every 60 minutes things can change. Every day things can change. So the new 60 matters. Now it matters more when it breaks a 2, because that's a trend, and a trend shows buyers or sellers have control over direction. So if this were to go inside, they agree on prices slightly higher than yesterday. If it were to go inside down, it'd be reversing, trying to go back through this stuff. If that fails, it's going to go cheap prices and then back to expensive above this, and then it might do that more than once. So the broadening formation is still at play. But you can see the first thing they did to start the 60, they bought, then they consolidate. They agree on prices slightly higher. And then what's the next 2? Is it going to be up or down? Will that change the 60 or confirm the direction of the 60? Yeah, so holding winners, it all has to do with your process, because everyone thinks you will rise to the level of your expectations, but in reality, you fall down to the level of your processes. So depending on your process, that will be what determines the quality of, I guess, your trading experience. And since we know how price reverses and continues, the process it's very simple. It's not easy, but it's simple. You pick one thing. So like one trade that everyone loves to trade is this: the 3, the 1, and then the 2. This is one of the trades people really like, because you get aggressive buying and selling. They agree on prices, and then a new trend starts, which counters this aggressive seller with aggressive buyers that are more aggressive than these guys. So you have aggression paired with a breakout. That's a good thing. So you can do this same condition every day for the next 20 years. It's always going to look like this if you're buying, right? These would be what your winners look like. The best ones will go like this and just keep going. The worst ones will look like this. 3, 1, goes a little, boom, destroyed. But since we don't put our stops down here, we take a tiny loss. So it's like tiny loss, tiny loss, tiny loss. Okay, I got a winner. Continue, 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 continue. Hold, hold, hold. You let price tell you. And if you let price tell you, you will never be wrong about what price is telling you, because we know, if it's going up, it's going up. If it's not, it's not. Therefore, every day, we can go look at 3, 1, 2 up. So these would be all the 3, 1, 2s today. You see Doc N, CoreWeave X. Notice they're all green. So these all worked. So we just go take a look at what those look like. This doesn't mean they all closed out at the highs. But CoreWeave, 3, and you can see the dojis. This is the problem. Doji, doji, doji. 2, right? It works a little bit, 3%. That's not bad. But then it comes back. So this would be an example of one. It just, so be it. Doc N, 3, 1, boom, you're in, hold. There's your winning position. And if you do it this way, right? Kraft Heinz, 3, 1, 2, in, right? As long as it's above that. There it is. If you do it this way, what happens is your account, let's say this is 0 and this is like $1 million. So you deposit your $10,000 or whatever you're depositing in your account. So your account starts here. You go in and you have this process. You take a small loss, a small loss, a small loss, a small loss. You get a nice win. If that win continues, your account continues like this. If it doesn't, it would look something like this, right? Small loss, small loss, small loss, small loss. Nice win. Starts coming back, and maybe you end up here because you move stops towards price. And then small loss, small loss, small loss. Nice win. And then maybe this one continues, and then you get stopped out of it. Now your account looks something like this. Small loss, small loss, small loss, small loss. Nice win. Small loss, right? And this is all you're doing. The only way you're going to get this, though, is if you have the probabilities on your side. So, like, why did Doc N move so hard? Well, Doc N had the inside 312 above its monthly open. It's continuing on the month with a daily reversal. Above its weekly open, that occurred. Above its daily open, that occurred. We had full evidence that should work. So, trade the same condition every single day. Do it for 2 months. Only do it above the month, weekday, 60 opens, or only do it below those opens. Because I just showed you the upside ones. Let's see if there's any downside ones. So in this case, there's no full time frame continuity down ones. And you can see most of these are rev stratting. So if we just go and look, these would be ones that didn't work today on the short side because the market's not going down. If, pretty much all morning it hasn't been. And this is why also knowing the rev strat or the inside bar shows consolidation. It breaks down, right? It goes down by 6 pennies, comes back in. If it's not below this low, that signal is it's not going anywhere. Because we know a winning position would look like 3, 1, 2, right? It's got to be above that high. If it's not above that high, it's not bullish. So if it's not below this low, it's not bearish. So we only want to be short if it's below 2108. If it's not, we don't want to be short. And that's how we keep the losses tiny. Now, your stop won't be a spread in a penny, always. But even if your stop was daily open, you lose 32 cents. And since we add to the winners, the smallest position you have, the initial entry that you lose, is your smallest position. The biggest position would be entry, add. And before you know it, you've added to your gold trade 17 times this year, and you're still in it because it still hasn't reversed the month. Like, look at this. Every single one of these lines is a higher low on the month. So the last reversal was in November of 2024. Inside bar, entry, add. Inside bar is consolidating. Inside bar, entry with more, add. Inside bar, add more, inside bar, right? So you can see it's a matter of keeping your winners really big and your losses as small as possible. Win rate and risk reward and all that stuff really is not relevant. It's hard to get in at the open when 20 alerts go off. Yeah, that's why we filter things. Because doc N, how do we find doc N? Well, if we go to yesterday, and this is why it's beautiful to have this software that you can backtest your scans on. Three, one. Okay, give me the ones with full time frame continuity. Boom, there they are. And then you can filter it, okay? How many days are we into the month? 13 days. Do I want to trade things consolidating this month if we're halfway into the month? Nope. So we're going to copy that list. It's a short list, much easier to manage. So I'm going to copy that to my clipboard and I'll clear the filters. So I'm taking those 3-1 days and then we go to the month. I only want to buy the 2s up. Okay, now there's 2 names. These are your strongest 3-1-2s this month for sure. So now you only have 2 names to watch and they're the best ones. Because they're going up this month. So if we go to MWA and Doc N, MWA breaks, stops you out, so be it. Doc N breaks, boom, there's your big winner. MWA didn't even matter. And you can hold that. However, we're going into the weekend. So you just gotta be aware. This weekly signal we had and this daily signal we had exhausts into the weekend. But over the weekend, the monthly chart is open, the quarterly chart is open, and the yearly chart is open. And you'll see the 3-2 years. So still trying to go to all-time highs, you can hold that one. And it's going up there this year. At least that's what it's trying to do. So if you see on the quarter, the lower low, reversal, boom, it's trying to go to 133. SPY on the 60. Wow, you made 60% on that? I wonder how you did it. Do you trade it off of the inside bars in here? I don't know. But we can see SPY, inside bar starts new price discovery. We got to stay outside of that inside bar. So if we're below that, you can see how it gives us a target with a signal. But if we're above it, it's trying to go 3. Now, how much evidence is there? Well, Q's also broke down very slightly. Dow continued. So the seller in Dow Jones comes back to sell more. That's okay. That's a good thing to know. And IWM is close to continuing, but not quite. So if we were to go look at our sectors, we can see, technically the majority is down at this point, and this is actually historical, my bad. I was going to say, it probably should look a little worse than that. Let's see. So you can see this, right? A lot of them going down, but there's also a lot of green. So a lot of tech names that broke down, they're buying the downtrends. That's what they're doing when we see this green on the right side. So we had all these downtrends, and they're buying some of them. So they're trying to reject it. Now, that doesn't mean it's going to reject because technically the most trends are still down. But if we look at the 60, look at this. Boom, everything's consolidating. So now what? How are we going to get a 2 across the whole market to the downside or the upside? That's the next question. IWM breaks down. Notice how that confirms Dow Jones is going down and the selling we picked up on the previous 60 is still following through. Small entry, and then add to it because it confirmed. You get more evidence. Same with IWM. Small entry on the 60, add to it because you get more evidence. If we look at the 3, technically IWM, if we're back below this, 260-296, you'd have a magnitude trying to take low a day. However, the day is very green still. So you're still conflicted, which is what's making it tricky today. SPY. We can see our broadening formation here. This 60 is confirming the Dow and IWM reversal on the previous 60. Q's is the strongest one, interestingly. 2260 confirms the signal on the SPY, doubling our evidence, confirming the Dow and IWM reversal. So, they're trying, right? It's got to get redder, though. So far, industrials are the weakest sector that we see. And you can see how it shows up in red here. And if we go to industrials, inside 60, down, and then confirms it's still going. time frame continuity is month, week, day 60. If you're going to do anything bigger than that, it's pretty simple because you can go like this. So like if we want stuff that has every time frame green, we just go here. Change greater than 0. Boom. Right? And we want just 2s up. So if you just want the strongest things we can find, like the most 2s up, you go like this. Copy, go to the quarter, copy, the month, copy, the week, copy, the day, copy, the 60-minute, copy, right? And the 30-minute, copy. Okay, these are the names that are 2 up on every time frame. And we will have scans and stuff that are built to do that specifically. But if we go to EPD, 2 up 60, day, week, month, right? Look at this, quarter, year, right? Is it going up this year, this quarter, this month, this week, today, and right now on the 30 and 60 minute? Technically it is. Now, is that a buy signal? No, because it's just continuation. We have to enter on a reversal. Like down here, 3, 2 down, 2 up, right there. That was the buy signal. Boom. Is this 30 minute kicked it in to 2 up year, month, quarter, week, day, 60 and 30. You'll see the 60 was the same. So you can see this rejection is still occurring here, which is what that scan just picked up on. CGNX, inside day, nothing. Now what we could say though is they're buying it, right? It's a 2 up, 3, 2, so we have an aggressive buyer in here trying to take yesterday's highs, but it has to be above 59.32, and you'd be buying at the top of a consolidation. So you're buying the most expensive price of the consolidation thus far. Come on, SPY, give us the arrow. And if we look at SPY and we get those big time frame continuity, the month, week, day, and 60 minute, we can have a better idea of what's trying to happen and where those levels are. The broadening formation is attempting to cause full time frame continuity if it's below 681.76. If not, we are still conflicted where price is going to go both ways. So it would have to be below 684.10 to cause 681.79 if they're going to really bring them in. So far, you know, today it's just a mess, right? It's been pretty slow. And this is where that inside 60 minute, you can see this slight lower low. You'd want to see them hold below these lows if we're going to see them break down. Or else you get the broadening formation back up as our rev strat. I'm going to turn all these indicators off. I can't handle it. And you know, the reason most people, if you've been on Twitter, a lot of people that trade, even if they're not trading the strat, they trade the 2-2 reversal. It's because the inside bar, it shows agreement on price. So unless you pair an inside bar with a very aggressive seller who's willing to sell lower prices, they're agreeing. So it can also show indecision or lack of interest, which today it's like doji, 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 inside bar, agree on price, doji. This one, you know, maybe it's showing lack of interest instead of, you know, making stuff happen, so to speak. Like if we go to the defense sector, could we say that they're not very interested in buying defense this month? At least they're not taking the offer. Yes, right? Now, when you pair this inside bar with long green bars, that's when the big stuff happens, like gold and silver. So we prefer, if nothing's really happening, we prefer to reject the inside bar. If we have a big trend, we prefer to go as a measured move with the inside bar. We need QQQ to help us out. Yeah, well, this is your level. 643 cents. Can price take that out? Because that's what would cause the waterfall into end of day, end of week. And given we're still an inside week, Is it showing disinterest this week, right? Seemingly so for the last day of the week here. They're just not interested. Like if we look at the US 500 inside 4 hour, US 30 Dow Jones, 2 up in red, so a little different. IWM inside 4 hour. US 100, 2 up in red, slightly different. But you can see they're disinterested in half of the indexes for the last 4 hours of the day here, or last 2 hours here. The only way that changes is if we can get some signals to keep those 60s down. So like SPY, this inside 5-minute breaks down. We always ask, what would it negate, create, or do? It's like, well, if this is the 60 level, give or take, this inside 5-minute would reconfirm the 60 as a continuation. And we saw the new 60 opens. So this was the new 60 open. They sell, agree on lower prices than previously on the 5-minute. And if it gets below that, they're trying to go even further. And maybe that would be enough to try and kick things in. The 5-minute inside SPY, Q's, Dow Jones, slight shooter, IWM, not so much, right? It's just, they're just not doing too much today. Love your content, Alex. Thank you. I wish I had better stuff to be sharing with you guys today. There's just for the index traders, there ain't too much going on. Utes were pretty good. But we can see financials are coming back in a bit. Industrials came back into that morning 60. Yesterday was a red day. Oh, so you want me to look at the 312s from yesterday? Yeah, can do that. Discord, they had problems with predators and stuff, so they're requiring it for NSFW. Ooh. Speaking of that 5-minute right there on SPY. So you can see how the 5-minute signal confirms the 60, but that's only for 5 minutes. But remember, every tick this goes down, the more these guys who bought in the morning are going to want to sell. And if you bought in the morning and you're still holding on, you can feel it, right? Every tick it goes down, you're like, boom, low day, right? So we want to see that get as red as possible. We have 37 minutes left, so we'll see. But they're trying, so we'll see. But if we look at the 312 downs from yesterday, look at how good these gainers were. 5% on this one, 5% on this one, 5% on this one, 4% on this one, right? Isn't that nice? Now with full time frame continuity, look at that. The biggest gainers are all full time frame continuity. So from yesterday, and I want to show you the radar, or the sectors right here. Oh, I'm not gonna be able to show you intraday yet, but I'll show you those scans. So Morgan Stanley, this was when I traded. I made 400%. Right in here, notice what I did. I used the 1, 3, 2, 60 minute with my stop 50 cents, and it dropped $10, and then I covered down in here for like 400%. STT. It was all financials too. STT inside day. And then how does that happen? Gap up, sell. 3, 2, boom. Let's see, EFX. Inside day. And then how does that happen? 3, 2 reversal, destroyed. All right. Illumina, ILMN. 3, 1, 2, right? And it made low day, and that was about it. But how did it do it? Gap up, the second that goes red, boom, 4%. So you can see, pick a signal, do it into full time frame continuity, do it for 2 months, and then come back and talk, right? Most people trade one signal one time or 5 times, and they do it in conflict during an inside month, and then they're like, Alex, the strat doesn't work. It went 3 after I took my signal. It's like, well, 3 is one of the things price does, and it does it when you trade inside months, which you're doing. And that's the problem. Like Illumina, they were selling this month. So that 312, we at least had that evidence that they were selling to try and go after it for one day. But let's go to the weeklies, right? If we go to the weeklies, if we want to see what really got destroyed this week, 1, 2 down week, full time frame continuity. Look at this, 23%, 15%, 7%. That's pretty good. And that was yesterday. Let's see if they got even better today or not. Oh. New low a day. I've literally been waiting for new low a day since we opened the morning session. I've just been waiting. I would love to see it. That's why we've sat. That's literally the only reason I'm sitting here. If we just went up 10 points and down 10 points in the morning, I would have just left. My girlfriend, I think she's done with work at 3, so I think we still got time. But okay, let's go look at the 3, 1, 2 down week. Full time frame continuity. Right there, that's the only one. RHI this week. What did they do? Oh, people just don't know, do they? Look at this. Now you ask yourself, how did it do it? 1, 2, 2 reversal, and then momentum shooter. So we can use momentum signals to trigger things. It looks like this. Momo hammer shooter continuation. This shooter signal entry. Momentum shooter signal. Boom. There's your 312. Momentum shooter add. Boom. 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 Destroyed. 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 Isn't that amazing? It's the only one that has full time frame continuity, and it's still down there. Now this ELV was full time frame continuity up, so we'll take a look at that one. So you see 312. This was continuation, so this is different. And I want you to notice that. So RHI and ELV. Red inside red, that's continuation. We don't like to enter on continuation. If we go to, or back to RHI. Green inside red. Buyer, consolidation, destroyed by a more aggressive seller. That's what you're looking for. And it's beautiful. It's just a beautiful thing. We go to the month. Do we have any this month? It doesn't look like it. This quarter, this year, nothing. We can see intraday, right? Most sectors are going down now. Besides discretionary, energies, and tech. Interestingly, tech is more firm. But half of the SPY's going down, half of the Qs is going down today and right now. So notice how the day and 60 sellers are confirming on the SPY and Qs. Which gives you the evidence. Like we said, we're trying to short a higher high on the 60 minute for the broadening formation. And we were wrong on the initial 30 short. But the 60 here gave us another way to do it, right? Gives us another chance to try. So we are doing lower highs to make lower lows during a daily downtrend, during a weekly higher high, potential lower low. So as we get into the last hour of the day here, we have 30 minutes left on this, and then we have another 30 minutes, or another hour after that. We have an hour and a half to try and take this stuff out. There's your triangle. And you see that inside bar starts new price discovery. Would I hold anything over the weekend? I don't. I'm scared to show you guys this because I don't want you guys to do what I'm doing. But okay, I'll just tell you. I have $6,000 in QQQ puts for the end of next month. I have $3,000 in TLT calls. And then, you know, that's where I'm sitting right now. So take with that what you will. And that's, I haven't even gotten to add to this stuff yet. This is just, I shorted yesterday, made a boatload, and I'm pressing that. I think we're getting it. I think we're getting the sell this year, and it's going to start at the beginning of the year because the year is red. And we're pairing it with the Rev Strat. Inside bar, they agree on prices, and now as we get below that, the buyers are going to think, oh, it's cheap. Oh, it's cheap. And then it's just going to keep going, and the buyers get blown out. If we look left, you see these pivots on the month, all this stuff? That's going to speed it up. So that's what I believe. Take with it what you will. 252% on the SPY puts now. Good stuff. Nice 2-1-2 reversal you got there, SPY. Puke. Look at the 5-minute. Did that cause the 60 to get redder? It did, because it had to. Right? 2, 2. And if it's really going to wipe them out, it'll just 2, 2, 2. Really big one into low a day, and then that's it. And you can see now they go 1 again. So now we need to see the seller come back, or else we're consolidating. It's not good to, so what most traders do, and the key, like if you want to know if someone actually knows what they're doing, this is one test that you can use. Over the weekend, they are pouring through 1,000 charts. And they're like, what's going to be the best one for next week, right? Which you can do. You can look for signals, but you don't need to look at 1,000 charts. You just need to look at the list of signals that you trade. And then Sunday night, they're going to be like, these are my 5 best picks, right? And I'm not saying they're wrong, but what I'm saying is this. Over the weekend, you got to think this way. If this is a weekly chart, right? So like we have weekly chart, then it goes like this. Over the weekend, this is a closed chart. We have no evidence. It's not trading. The day is closed. The 60 is closed. So the weekday and 60, 3 of the 4 most important time frames for any type of investing or trading, aren't trading. So you only have the month, quarter, and year that are trading. So you could have the best looking chart, right? Like our favorite looking chart looks like this. Something like this would be like our favorite looking chart. Best looking chart in the world. Monday opens, they're selling this week. So the way to, I guess to get to the answer of your question, finding proper setups is just finding signals. That's it. And then it's a matter of what type of trading are you doing? Are you trying to buy dips, right? That's a little trickier. Are you trying to get into the strongest stocks in the market? That's a lot easier. Are you trying to cause rev strats on monthly charts? Pretty easy to do. It's a 2-2 reversal on the second week of the month to cause an outside month. What are you doing? XYZ, right? You have to have a plan of what you're going to do. And then you just find the signals with the scanner we got. It doesn't take that long. You can see SPY, the inside fiver, they firm it up. So they're agreeing on price, but the buyer is more aggressive right now on a 5-minute. But like we said with the 3-1-2s. So like if we're going into next week, what do we scan for? 3-1. All right. There's only one. That'd be all. Or actually, remove this. 3-1. All right. There they are. And then what I like to do is go like this. I like things that are moving. So give me the stuff that's moving more than, 5% a day. Boom. This is what I'm watching next week. And then you go on about your weekend. There's no messing about. It's that simple. Now, if you're going to get further into this, these are all different conditions on the week, month, quarter, or on the month, quarter, and year. Some of these are reversals. Some of these are going to be continuation setups. So you can filter it further. It's like, if I think we should be shorting next month or next week, I want to short the things. I'm going to copy this list. I want to short the things that are going down either this month or this quarter or this year. So if I want to short 312s that are going down this year or this quarter, these would be it. And you can see SMCI, Bill. These would probably be the only ones I'd look at, with MMYT as well. And you can see MMYT and Bill, they're selling it. So if they're going to go down 60% this month, they got to go 30% first. So we go to MMYT. Three one. It's continuation. So we have to be aware of that. Where's it going? The yearly target is 43.41. There it is. And then what matters is, are you below the signal levels? Because this is only bearish if we are at least 1 penny below 54.59. If we are trading 54.58, it is no longer bearish. Well, if you're going to hold something over the weekend, like if you're going to hold gold over, like, whenever the new month opens and the new week opens and the new quarter opens, what do you need? You need the yearly buyer to be present. So if we bought gold inside year up, the buyer's present, we can hold over the weekend, we can hold over the new month, the new quarter. We have evidence on the year. So we have all year for evidence. So if we're going energies, why is energies easy to hold overnight? We have all year for evidence, 2 year. What about OIH? We have all year for evidence, right? It's all about evidence. So this year we have evidence. So what about this quarter? Yep, they're buying it this quarter. So we can hold overnight this quarter. What about this month? Yep, they're buying it this month. We can hold overnight this month. And this week, over the weekend, the week is closed. So you only have the month, quarter, year over the weekend. But the month, quarter, and year, all three of those aligning tells you this month, this quarter, this year, they're buying. So over the weekend, it's unlikely they're selling. It's highly unlikely they're selling. So it's like buy, hold, or buy, add, slight lower low, get more, add, month, quarter, year, still green. And when you're trying to do swing trading, those are the three most important, because those are the only evidence you can have over the weekend and overnight. Outside of, over like throughout the trading week overnight, you have the weekly. But the quarter, year, month, week, buy, add, just keep adding. So we got like the strongest stuff, MU, 312, right? And you can see it hits its target, and then they test the continuity level, stopping people out, and then they keep going. And we know that happens, so we're not scared to get back in. Stops them out, still an inside bar where they agreed on price, right at the continuity level. I agree on prices there too. I'm going to buy there. That's a good price. We agreed. It's a good price. Boom. Then they agree on prices higher. All right. Well, now I know it's worth more than what I paid for it. And that's it. So when you go to like a daily chart, even the red days are green because there's still buying occurring during these red days. We just don't have the evidence to say that for sure. So when you look at this, buy, slight lower low, 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 buy, and then boom, right here, conflict. Profit taking, selling going on, goes up, slight lower low, and then they buy it. And that's all that's going on. Yeah, JD. So JD, inside year down, where's it going? Down there, 2018. This month, RevStrat month, where's that going? Down there. This week, 2 down week, so it's going down this week. The daily, how did it go down this week? It made a lower high, because you'll see on Tuesday it went up, and then on Wednesday it reversed. That's a lower high because it's downtrending on the week. That's lower than last week. It's downtrending this month. It's lower than last month. It's going down this quarter, so we're making a lower high during a downtrend. Right when this flips red below 28.30, that's when you sell it. Boom. So it's downtrending, and that's what they did. And you'll see intraday, it's a little trickier in here. But intraday doesn't matter as much if you're playing those bigger, the bigger move. And you can see if we look at SPY with the quarter, 12-month, 3-month, you can see what's happening. Aggressive selling, aggressive buying, aggressive selling. And this is what price does. It's going to alternate back and forth in a range until the aggressive sellers go, boom, yeah, we're going to sell much lower. Because they're agreeing on price, consolidating. When it breaks out of this range, if the aggressive sellers are there, yeah. Good to go. So notice SPY intraday, they agree on lower prices. So now imagine, right? If they agree on lower prices here, this might be a cool indicator I could make. Everyone that bought up here, they're holding expensive losing trades because they agreed on prices lower. They bought higher. That's an expensive losing trade. You can look at it however you want. You can look at it through the equilibriums, through the broadening formations, through just the signals, but you have to align all the colors in your favor across time frames and signals in your favor across time frames, and then timing those signals with the broadening range. Those are the 3 minimum requirements. So let's see what's going on in the sectors. So you can see it's the sellers, they definitely have control of it, but there's still a lot of buying that's going on today. A 60-minute, boom, right? That looks a lot different, doesn't it? Now, if you wanted to see where they're buying, you don't want to buy the downtrends. You want to look here in communications. You'd say communications, there's still a lot of uptrends there. So that's still stronger, but you can see staples and energies and all that fun stuff that was going up before. Go to XLP, look at it. They're buying it all day, all day, all day. Now they're selling it as we get to the end of the week here. So what did they do this week? They bought staples all week. Then they're selling at the end of the week after the top of your broadening range to gauge magnitude to go down there. So anyone that bought in here is at risk of this taking them out. And it's crazy stuff, right? It's crazy that you can know what the market's doing. We don't even have to look at a chart and just be like, yep, it's going down right now. Get the puts. So if you look at the 5-minute SPY, if it's going to keep going on the 60, what does it have to do? Well, inside bar, they agree on prices, ticks up, the seller's still here on the 60-minute basis, so they sell because they're like, yeah, no, no. And then the reversal here would cause anyone that bought to go into a losing position. So the rev strat occurs below this, 6846 on SPX. You see on SPY would be here, 68269. So you have inside bar down causing the 60, inside bar down confirming the 60, rev strat or double inside potentially break down to keep confirming. Hey, down, agree, down, agree. Another way you can look at this is a 15-minute inside bar. 3 5-minutes inside the previous range. So even though, we got a 15-minute chart, might look slightly different than what we just drew out. I believe this one is correct though. Yeah, 15-minute inside bar. And the way inside bar works is if we're going to get the momentum. And once you understand all this stuff, you can really do whatever you want. But like, look at this. So if we're going to get the momentum shooter, right? Something that looks like this. What does it have to do? It has to go up, and then towards the end of the bar, it has to reverse and go all the way down quickly. So it has to go up, and then towards the end of the 15 minutes, we have 3 minutes left on it. They got to bring it back down to the open, which is here. So you can see the inside, inside, down, down. They're trying to bring it back to the open, which creates 15-minute momentum shooter. And that 15-minute shooter is the add to the inside 30 signal here, and the 2-2 signal we shorted at high day. I held on to it. And then the add to the inside 60 signal. So you can see just how many entries there is You have the 30, the inside 30, the inside 60, the inside fivers, the inside 15 minute. You can get into anything if you understand the strat. But once you understand it, you have to understand what you want to get into. What is the better trade? Yeah, so look at, this is what my friend, this is our institutional trader friend. He used to trade for a fund using the strat, literally just trading broadening formations. And you can see this is what he did. He sold 10 on the retest of the broadening range. Because what's happening when you have a broadening formation is you're just identifying a range of traders. And notice, eventually, since it's a broadening or an expanding range, you could say, the range will expand. Outside of the previous range, there is an unwinding of positions. So it's like they sell, they buy, they sell, they buy, they sell, they buy, they sell. Uh-oh, we got to get out of our shorts. Gone. So he's betting on the fact you have this insider consolidation and it's breaking down as a broadening formation expansion. And that's where the big quick stuff happens. Because when you get outside of the range, everyone that's wrong has to get out or they're going to lose their house. And you can see here, down, down, down. What is that creating? Momentum shooter. 23 seconds. And the way momentum works is it's supposed to go instantly, which means we can use the spread plus a penny. If we get this set up, I'm going to try and do it really quick so we can have it. Oh, let's see. Where is it? Bid ask. Trading. Nope. Scales and lines. So the way it works is this. Right when this breaks, if it's green like this, that momentum shooter is not true. Because if it's momentum, what we're actually picking up on is algorithmic selling and whoever bought in here is trapped short. So notice how it's green. It's like boom, boom, boom. These sellers just disappeared. Now that doesn't mean this can't re-break, right? Definitely can re-break. But it's supposed to break and go instantaneously. Because if what's true is that we trapped guys long and we have them paired up with an aggressive seller who's selling at the bid right now, it should have broken that and just gone, gone. Kind of like the momentum 222 yesterday. And this is the same type of thing. Notice it goes up and it comes back in and closes. So if we just use our imagination, you can kind of see it there. When it breaks here, it should just go boom, puke. That's what we want to see. And it allows us to have very tight stops. So when this flips red, like the way, if we're doing this properly with hotkeys and everything, if this were to flip red, most traders, they're going like this. We are like this because we know if they just bought and they're wrong, when this flips red, it should go bam, and it should hit their stops. Because we're pairing everyone selling, the yearly group, monthly, quarterly, weekly, daily, 60 group selling, with whoever this guy is buying like 1,000 shares. That guy should just get out. And if he doesn't, he's gonna get destroyed if this happens. For now, it's still green. So we'd say it's conflicted. It's downtrending, but the buyer's more aggressive. And you can see on a 1 minute, it's a 3-1. So the question would be, does that set up a 3-1-2 down or 2 up? It's got 8 seconds. So what we want to see is the momentum like this. Really tight stop it. And it just pukes. That'd be the ideal scenario for us. Plus, we're running out of time. We have 45 minutes left in the day, so we gotta get this move. We gotta get this thing moving, or else we're gonna not have enough time to hit our targets. And if this closes out and it hasn't hit our targets, we're not hoping for Monday to like gap down into them or anything. It either happens within the time allotted or it does not. Look at that. Boom. See how their stops just got hit? That's momentum. It's supposed to just boom right through. You sell and it never comes back. So then you go break even, it shouldn't come back. And this applies to every time frame, but it's relative. So a 1 minute, right? This is not the biggest group. Like if we look at the volume of this candle, how many people actually were in there? Let's see. Well, it was like 10,000 shares, right? Not much. So 10,000 shares, that can still work, right? And we can just re-enter if it re-breaks. But what we want to think is if we trap a 60-minute group, that's 10,000 shares times 60 minutes. That's 600,000 shares. That's going to have to hit the bid or, you know, they're going to lose a lot more money. So a 1 minute signal is just not as powerful as something like a 60-minute, like we saw on the 60. Wasn't this 60 really powerful? Didn't it do stuff? It's because how much volume traded? 700,000 shares traded in here. And it was both longs and shorts. And then we take this out and those guys had to get out, and we have people selling. And we're triggering the stops of longs from the morning session. All of that's true. And the weakest stuff will be things taking the morning lows out. So you can see we look at like real estate, staples, utilities, none of that's taking the lows out. Now, if we want to see where the weakest stuff was, and I've kind of just been talking, I haven't been, you know, my focus has not been to just create a million winning positions today. We're kind of on a roll here. But the weakest stuff is 2 up, or actually it'd be inside 2 down 60 with long red bars. So let's just go look at Bros, FLUT, ANET. So you can see Bros, it's below its open, but we want to take out the morning low where these longs have their stops. And they have not done that. ANET, right here, notice this. This is what you're looking for. This inside 60, when it breaks, you see these pivots to speed price up. It breaks here, boom. Anyone long in here or long in here, they're out. Look at how fast this happens. You short, it goes boom, and it doesn't come back. Look at how many stops you triggered. You've got, do you see this huge spike in volume? That's the stops going off. This is why we can have tight stops, because it should be instantaneous. If we're correct in our analysis and price is going down and you're long, you've got to get out. You've got to get out. And that's why the strat is just as beautiful as it is. Now for now SPY, you'll see they triangle they out. And triangle they out is simply 3, new low, new high. There's your triangle, and then back down they go. So you can see the inside bar, agreed on price. It went cheap, expensive, short, back to cheap. So if you go to like a 15 second or something, or maybe a 30 second would be better. You can see equilibrium, test the lows, test the highs, trying to test the lows. And what we'll note as well is as we get towards the end of a signal, like this inside signal, that's when we will tend to see profit taking, because we're close to exhaustion by time. Price will either exhaust by price, like how we went into short-term exhaustion at high of day. And when we mentioned that, price only went 31 pennies higher than the level we mentioned. So very specific right there. So you can exhaust by price. And then you can also exhaust by time when bars are closing out. So both of those things matter. When things happen, where things happen. Come on. So you can see we want it below that equilibrium so we can cause selling, but for now it exhausted. So we have a 2 minute equilibrium to this bar. So you got 3, 1 on a 2 minute chart. Right there, 3, 1. And below that is where the break occurs. They're going to try and get them puking again. Come on, SPY. I just want to see low a day. I don't ask too much. And also the other thing is, like we were talking about momentum shooters, right? It's all fractal. So if SPY were to close as a shooter day into a 2-2 week next week, into a monthly reversal, it would go up. And then at the end of the day, the back ender, it would go down towards the direction of the 2 down day. Right? So we want to change that daily open. We want it to get red and we want it to close. It would be something like, it goes down, open, goes green, and then we wanted to see it go red and close something like this. That would be ideal, because then next week it can go boom and just take everyone out. And we can do that since we know an inside 60 will cause that to happen. As you saw on the live stream today, even though we were slightly early, is what it is. Let's go to the 2 minute. Did you see it? Boom, there's your new low. And once it makes that new low, we don't know. The goal is that we make the new low and just keep puking because we're taking out whoever bought during this bar, putting them in a losing trade. So the best trades, it hits this level, puke, hits this level, and just rips through it. And we can see if we zoom down in here, all that's happening is the big broadening formations playing out in here. Consolidates, new lows, didn't go anywhere. So they stopped some guys out. If they reverse again, which they did, we want to see that new low again to get these guys out of here. Come on, SPY. We got 6 minutes left on the 60. And then that signal exhausts. And then we always have a count of signals because signals are where your stops are placed. So we only have the 60 in force on SPY, which is why it moved, right? The signal caused it to move, as it will always. Signals always cause movement. It's how it works. So once that exhausts, it's up to the sellers. Are these sellers aggressive enough? Get us below that daily open and cause all these longs in here to go into issues. And you can see IWM, we said this 3, right? 262.97. The reason that's important is because we know broadening formation is a higher time frame 3. It restarts when we go inside a previous range. Therefore, if broadening formations that test both sides of the range are 3s, 3s are levels of reclaim. If you're below that level, you go the other side. And this, I think, if you're going to take anything from this stream and you're like, Alex, there's too much, you're giving me too much information, just understand 3s are broadening formations. You can make so much money. The guy who I just mentioned was an institutional trader. He shared with me and he made multiple 6 figures just with 3s. So look at US 500. Is it obvious now what happened? 3, level of reclaim when the day went red here, the daily sellers were present. That gives you 212 points of range. You just short it up in here and hold. How do you short it? 3, 3, 2, broadening expansion right there. And it goes instantaneous because a 3, 2, you should have a stop. It should literally be the open of this. Like 3 points, boom, 100 points. Even if you stop out 10 times and lose 30 points before that works, you always make your money back if you're right. If you're wrong, you'll make it back on the next one. If we go back to the 4 hour, the US 500 or the NAS one or the US 100, let me show you. We mentioned 3, 3, potential 3. 1 penny, 2.6 points above that. And the second it comes back in, you can short it with a stop there. It's already down 200 points. The risk reward on this is risking 2 points to make 200. That is 1 to 100 risk reward if you're able to nail that. And if you nail it here and you risk 55 points, you still make 1 to 3, and it's not even halfway to target yet. So you still got some time on it. New 60s, 3 minutes. SPY changes the daily open. Watch what just happened. Anyone long in the morning, boom, this is their stops going off. Get me out, get me out, get me out. It's going against me. Get me out, get me out. Your 0 DTE puts should be up very big if you were listening in. And notice the small loss is paid for by the big gain. That's the strat. Get me out, it's going down. What's the news? What's the news? Oh gosh. 200% so far. Thank you, Alex. Love it. I just want to see you guys win. That's all I want to see. Of course, I want to win too. But I want to see you guys win. Now, what we would say is we've taken out all nearby pivots on SPY. Boom. These are all your pivots, including the daily open. So now, are we weak enough to actually take low a day? We are going to exhaust this 60 signal by time in 1 minute and 38 seconds. The next 60 will either reconfirm what is happening, where the algorithmic selling by price and time is still true across the whole market. As we had seen, the whole market, right? 80% of every sector is going down. Did you know about that? You did. If 80% of the market's going down, how hard is it going to be to reverse 80% of the market? Well, as you saw, it took us 2 hours to do that earlier. So is that going to happen in 1 hour at the end of the day before a long weekend? Highly unlikely, right? I think we're going to low a day. I think we have every reason to believe that's true. We just got to be aware in 1 minute, if you're using 0 DTEs, the tightest level of defense where we defend winning positions is this. When the new 60 opens, if we see a 1 minute that breaks up, you get out or you reduce. So as we get to the end of the 60, this inside 1 minute in 40 seconds, if that closes out, if it breaks up and you're trading 0 DTEs, that's the tightest level of defense we would have. Now, if you're just like, you know what, Alex, I'm going to let my winner win more because that's what the strat is, letting your winners win. You can do that. But the best way with 0 DTEs is once you hit, 200%, you can sell 25% of your position and you can guarantee you're going to walk out a winner today. And that's guaranteeing that you're a winner removes all the stress and fear and all the negative things you deal with. So I think that's an important thing to think about, right? If you can guarantee you're a winner, makes everything a lot easier. Like I made a lot of money early this week. I had some Q's puts that went against me. I was down like 1,000 on them, but it's their money. I already won. I beat them this week. So I'm going to let them, mess around at the lows. I'm okay to hold them and then add to them at high day like I did. But here it is. So look at right there on the 1 minute. Boom. The second that goes 2 up, if you're a 0 DTE guy, that's where you would try and defend. But again, I think we can just let this win. I think we have every reason to believe this should just keep going, which also means when this goes 2 down, if you're up a ton, you could buy some slightly out of the money puts, maybe low of day. I don't know what they're trading at. We have 30 minutes left. It could be 50 cents or 20 cents to get a low of day put option. If it's a 2 down 60, that seller's still here and you could risk some of your profits in further out of the money puts. And if SPY, really rips through them and drops like $5 below low a day, within 30 minutes, those would go, 2,000% real fast. So you can do a lot of different things, but it's always get their money first and then the casino's open. I took the 6860 puts at 11. They're at 45. Let's go. Woo! And you can see that 1 minute right on the flip, that mattered, right? Market just stopped going down right on the dime because those algos are like, yep, all right, turned off. And we'll know if they turn back on if we go 2 again. That's when they would do that. Do you see this, right? Right on the flip, boom, the algos, they're like, all right, we're taking profit. So we're incorrect, but that's why we use the tight levels of defense with 0 DTEs. And if you didn't, you can always reduce here, right? It's just slightly higher, that's fine. I still think we can definitely try and go lower, but for now, inside 5, 30, 15, 60 minute, they just went equilibrium on us. So they're no longer trending. This easy downtrend just completed, and now, we're gonna have to see what the next 2 is. And what will it create, negate, or do? An inside 5 minute to continue down would give us a 2 down 60 and a 2 down 5er. That's something I would be interested in. For those of you guys that have been listening in, what do you guys think? I want to know your guys' opinion. Because I spent 6 years learning, teaching, trading the strat. And I want to know if you guys are like, wow, this stuff is crazy. especially if you're newer to the strat. $250%. Thank you, man. Had a terrible day before this. Just keep those stops tight, man. Just rejoined a few days ago. Awesome. Awesome. The GOAT? Nah. Rob was the GOAT. At least in my opinion. Love it. Awesome. I guess the mental frame you have to have if you're going to do this, you're actually going to do it, is you just need to think, okay, if I know if things are going up or down and when they're going to do it, what's the highest probability thing I can do? And it is the simultaneous break. And we've already discussed it a lot in depth today. So if you can just take that and put that in your tool belt, you're good to go. The strat was built so we could figure out when the whole market reverses, because that's what matters. And we still got 26 minutes. We have an inside 5 momentum shooter. This 60 seller, they could come back, right on the next fiver when it breaks down. They could be like, yeah, no, market's still going down. I got to keep selling. I still have so much to learn. Thank you. I don't want you guys to feel overwhelmed. I'm very excited. I love this stuff. Okay. So I could sit here and talk like this for 6 hours a day and till my voice is gone, which is already starting to go away a little bit. But you don't have to be a master of everything. Like when you first started learning math, what did you do first? Adding and subtracting. And you didn't even do the big numbers. You only did like 1 through 10, adding and subtracting. So with the strat, the equivalent of that is just trade the inside bar simultaneous break across the 4 indexes, like we showed you here, SPY, or just trade the 2-2 reversal simultaneous break on indexes, and it'll give you high probability stuff. You know that you can hold it until it reverses, so you don't have to worry about getting in and out a lot, which is trickier without hotkeys especially. And you would have caught the short in here. You would have caught the long this morning when we said it simultaneously broke. Yes, there's some drawdown on it, but like we said, we didn't have as much evidence here. Then you would have caught the short here on the 60. So you got all the ICT guys missed this. Then you would have got the short at end of day, right, in here. You'd have got the long this morning and the short here into end of day. And that's just with the training wheels, right? You can get as in-depth as you want, but the 2-2 and the inside bar simultaneous break, that's the training wheels. You could be a one-trick pony and do very well. Yeah. Well, the thing most traders don't understand is that they'll say, this is what they say, and it's a lie. And that's why everyone loses, because they're lied to all the freaking time. It's so frustrating on Twitter. They'll say, gold trades different than the SPY. I only trade gold on Tuesdays because XYZ. It's like, did gold make a scenario 4 on Tuesday? Like, what are we talking about? It's just a 1, 2, or a 3 every day. Like, what are we freaking talking about? The only thing that changes is volatility. So if you nail down inside bar simultaneous break, like the short here on SPY, if you just nail that down and hold the winners, and you do that for a month when the VIX is over 20, you're gonna make a ton of money for 1. For 2, once you nail that down, there's simultaneous breaks across everything. Like yesterday, the airlines, look at Jets. The Jets ETF, gap up sell, 2-2 simultaneous break, airlines, United Airlines, right there. Where's your stop? 40 cents. Delta Airlines, right there. American Airlines, right there. It's all the same thing. So if you can just trade a 2-2 simultaneous break with correlated assets, you can do it there. And then let's go to Bitcoin and Ethereum. So Bitcoin, it's a little trickier. You got 3s in here. But you'll see the weekly 2 up red, 2-2 reversal, boom, right in here, 2 up, 2 down, boom. And this was January 19. What about Ethereum? 2 up, 2 down, January 19, boom. What about Ripple? Right? Did Ripple do it? 2 up, 2 down. This actually did it the week before. So it was the earliest one to break. Boom. Right? Gold and silver. Gold, inside year here in 2023. Silver, inside year here, 2023. Boom! Right? Because once you realize everything's the same and it's already figured out, there's nothing to figure out. The only thing you have to do is execute and pick your favorite. Yes. So like if you want to get the best bang for your buck, this is what I'll tell you. We built the scanner for the traders who understand the strat. The scanner is not the end all be all. Although, right, it makes it really, you can be really cocky because you can look at this and be like, it's going down, right? We know that. We don't have to open up a million charts. You can pull it up on your phone. But for those of you that are not in premium, and I'm not trying to sell you stuff, I'm telling you this is the best bang for your buck. $150 a month premium. Buy it. And if I say simultaneous break, that's the only thing you're listening for. You could listen to it all day, and if I don't say that word, you do nothing. When I speak it out and I go SPY, Qs, Dow Jones, IWM, simultaneous daily, simultaneous week, 60, whatever it is, I'm calling to you. That's who I'm calling. And if you can do that, we have people who've joined. They've used our Gapper scanner, all the other stuff we've made. They can join and you pay for it. You can pay for it, if the market's really moving in one day, you'll get it all back and then some. Or, it might take a couple of days. Sometimes the market's just slower and that's just, make hay when the sun's shining. When the sun ain't shining, stay inside. And that's all it is. Yeah, so what time frame? Don't even screw around with the 5 and 15. Because what you have to realize is look at this on the 60. US 500, 60. Okay, short, continue. You're still short. That's it. There's no thinking. If we go to the NASDAQ, 2-2 reversal, short, simultaneous break. All right, that's you. 2, it's still going. Just keep it simple. Because you can't, although, it's really fun to do all the crazy stuff. Like I got the 1 minute into the 5, into the 70, blah, 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 blah. You don't have to do that. It's like the difference between like someone who's a black belt in jiu-jitsu and they're like, you can watch a fight and you can say every single move that the fighters are making and like, oh, they did, this grapple, blah, blah, blah. So then they countered with XYZ and like, blah, blah, blah. If you never heard of jiu-jitsu, it's like French. But if you could just understand like, oh, well, this guy's on top, this guy's on bottom, the guy on bottom's kind of screwed because the other guy's got his back and you don't want to let the other guy get your back because of XYZ, you can at least still pay attention to the fight and know what's going on to an extent. So if you just know 2-2 reversals and inside bars, you can still compete. ICT traders, done. Oh, man. I still have 2-point stop loss on the hourly. So with the simultaneous break, the stop's wider. Because like we were discussing this before, I don't know if you were here. But if the whole market goes like this, so let's just picture the whole market goes like this at the same time. Oops. So it's like 2-2 reversal, 2-2 reversal, 2-2 reversal, 2-2 reversal. What is that telling you? 70% of the market, and I'm just going to show you, I want to be very honest with you guys. So what percent of the market is traded algorithmic? $60 to 80% of all trading volume in the US equity markets is executed through algorithmic trading or automated system. High-speed, computer-driven trading grown significantly. It accounts for 80% of orders. The algorithms have to be told what are they going to trade, how are they going to do it, buy or sell, and how aggressive are you going to buy or sell, and then when to execute the trade. We can figure out what they're doing and when they're executing the trade because the inside 60 tells us to be watching price. It breaks here. They were told to execute the trade on SPY, sell, hit the bid, and do it right now very aggressively. And they're not doing it just on SPY. They're doing it on QQQ. They already started selling Dow Jones the hour before, so we already have evidence the market's going down. And IWM already was going down. So guess what? The algorithms were told, sell the whole market, right? How do we know that? Whole market right here. Sell the whole market, do it right now, and keep doing it for the next 4 hours. That's what they told them to do. And we picked up on that at 1830, and then we confirmed that with high evidence an hour ago. So when the whole market reverses, we should just be in. Like, if me and you are sitting for coffee and I'm like, yeah, well, I was driving down the highway and then everyone turned around and started going the other way on the left side of the highway. Like, they started going the other way. You'd be like, what the heck? And then you'd be like, what did you do? And it's like, well, I turned around too, because I can't just drive towards all these cars going at me. Like, they're going the other way. I have to go with them. That's what you're doing, right? Everyone turned around. Good luck trying to turn around 100,000 cars on a highway, right? If like, imagine you walk out on the highway, just you, okay? You have your little Toyota Prius. You get out and step in the middle of the highway and you go, stop. All of you guys need to turn around. You're going to get run over. That's what just happened, right? Whoever's trying to buy this, oh, my fair value gap, run over. Your Prius isn't going to work here. Oh, but we're retesting, run over. Don't walk in the highway. That's how it works. So when it breaks, you have high evidence and you don't want to get run over. So you want to stick around. So the risk looks like this. That'd be a risk. And it'd be the high of this one. Now, you can tighten that up, but the tighter you go, the more willing you have to be to re-enter. Because if you have a 5-cent stop, you might have to re-enter 3 times, but you're only losing 15 cents if you're wrong 3 times. The best positions will break and go instantaneously. So if you're like, Alex, I just want to trade the best positions, you can use tight stops. Right? You can go like 60-cent stops, and that's tight enough. You can go tighter, but with simultaneous breaks, you just have so much evidence you don't want to stop out unless you're really wrong. And that will happen, right? But even when you're really wrong, you can normally minimize the loss to an extent, because what does it look like when we're really wrong? Like, let's just take a look. This inside bar breaks up and then it closes right here. It only went up 13 cents and then the signal was done. Get out. You make 13 cents. Now, if we're really wrong, looks like this. Inside bar breaks up, goes red, and then 3. So the biggest loss you take, $1.50. And that's why, I prefer use the open, and I would just rather get back in. Like, lose $100, lose $100, boom, get in, make 6 grand. All right, I'm happy with that. That's my personal, like, the way I do it. But it customizes itself to you. So if you're the guy who's willing to get in and out, and you've been chopping yourself up, getting killed, you can go do that on simultaneous breaks and you won't get killed because you have direction and you have reason for the market to actually move. And I'm sure you guys have seen, the order logs where you have the up arrow and down arrow on every single candle the whole trading day. And they're like, yeah, I made no money. It's like, well, duh, Is that making sense? I know I talk a lot, but I want to give you a very big picture of, so you can understand it, because you only have to learn it once and then you've got it. Like, once you learn to ride a bike, you could break a leg and you could probably still ride that bike. There's not really much else to be said. We can see, the sellers still have control, but that actionable signal to cause the movement, this inside bar, it's no longer a signal for us. So do we have any signals? Well, we're inside 4 hour. So this is a higher low. There's no daily signal, no weekly signal, no monthly signal, no quarterly signal, no yearly signal. So we have no reason for price to move, which also means, you know, cover the 0 DTE and we'll just call it quits. But if it's gonna move, it would be like a 15-minute inside bar, right? Maybe it goes rev strat or something like that. I want to see them finish it out. It's just we might run out of time here. We only got 12 minutes left. So this inside 15 is actually the last 15 of the day. So what we'd want to see, if we're really going to send them through, is this on the 3-minute, like a 2-2 or something that kicks in and just wham. But I'm not sure if we're going to get it here. So you can see 3-2 up, fiver. So that's the only signal we have is this outside fiver that is bullish. Every other time frame, 0 signals. So we'd need to reject this 5-minute signal if anything good was going to happen, but you can see they're taking their profit. So that was all she wrote. By time and price, we didn't quite get low a day, but we were correct on direction and timing with that 60. We're good to go. I'm going to study trading the 60. It seems so helpful in confirming a trend or even a reversal and even when to enter. Yes. And the reason that is because the 60 shows you right now. And if you want to make a winning position today, you also have to make a winning position right now. So you got to make sure you got those 60s in your favor when you're trading. Like if we were buying right now, this 2 down in green, it's technically in our favor, which is why this 5-minute guy is able to go and buy here and actually make a winning position. He's got the 60 in his favor. Now, does that stay true though? And do they come dropping all the way back through, reclaiming the 3 right here? That would take that guy into a loss because it rejects, but you can see they're holding above it right now. I'm just wondering if trading the 1 hour 2-2s, I can use a 1-minute ATR as a stop loss. I wouldn't even, this is like, sorry, I'm just trying to gather my thoughts here. Don't make it more complicated than it has to be. Like I started trading in 2020. I'm 23 years old. I started with like Bitcoin and I can prove it to you. So this was back in high school. So this is 2020 and this is the older stuff. This is 2019. Okay. So this was 7 years ago. Look at this, the crap that I was trying to learn. Do you see how retarded? Okay. I'm not saying you are. I'm just calling myself dumb. Like it's just dumb, right? This is all, it's dumb. Waste of time. And it didn't stop there, right? I went through literally, like I have an obsessive compulsive necessity to learn things. So I learned every strategy, everything I could get my hands on, every video, every interview, everything. And I wasted all that time. And I wish I could tell you, you know, like once when I started like the Discord and I started coding stuff for the strat that I was doing like amazing. I didn't really start doing a lot better until I realized that the more complex it is, the more impossible it is for a person to actually do. So if you want to use a 1-minute ATR, do what you want. But I'm telling you right now, if you trade simultaneous breaks and you just hold them until price reverses, over time, you will win. You don't need literally nothing else. Yes, so let's just say you're holding to a reversal against on the 5-minute, but you hit an hourly target. Yes, you can get out. However, this is the way we need to think is since we know that the market moves in broadening ranges that eventually get bigger and just blow out like this, we have to realize when we hit targets, that is the bottom of the range. So this chart looks like on a bigger time frame, something like this. Okay. So this 2 up, 2 down reversal, this is the bottom of the range. It's the target. That's the bottom of a broadening formation because we can see it right here. The same way it's right here. So the goal of the signal is to hit the target, yes, but the goal of the target is to blow through it and force everyone long within this range into a further losing position. So the target, this is simply here to create a winning position that you can hold. Because once you get this one, it does that, you can hold that 10 years. If it never comes back, you can just hold it forever. So it removes all downside or upside risk if you're shorting or longing, whatever you're doing. So when you hit the target, either price is going to reverse and come back above it like it did here, and like it did here, coming back below it, or price will blow through it. It's either true or false. So like in here, inside bar down, where's the broadening formation? The 3. Take the lows, take the highs, inside signal, and you can see it was like 3 bars inside of this. Breaks down, closes below it. That's the winning position you want. Because you just took all these buyers, boom. The signal is only there to allow you to enter this trade and cause it to close below this. If you can think about it like that. So if it ticks down, and let's say it closes below and then it reverses, it's like get out. Maybe you short it here and you close it for like nothing, right? Maybe a 10% loss on options. But if it closes down, it stays down, this is your payday. Hey, look at this as we get to the end of the day. Wow. You can see the inside, or what is it? 2-2-15, so it actually reversed. You'll see that 60, they sold, done. They're back up. And now you still have this broadening formation, so let's just watch this as we get into the close here. This is what price is interacting with. So if we go inside 1 minute, and it reverses, where's it trying to go? Down in here, right? Or if it goes 2-2. Yeah, so SPY, 20 minutes ago, I took this trade on the 5 minute. Took the 5er, wrote it down, it reclaimed for a sec, never reversed, got me out. Yeah, because it didn't reverse, it was still going down. See? And that's what I mean, like, with everything, people, you just want to make it so complex. But like, let me just show you the best investment in the whole market, Costco. Do you see this? 3, broadening formation, goes down. The second it's a penny above that low, we can buy it to go up here, 75%. The goal of this is to take the other side and stay out, breaking out above this range. So we are entering the battle. This is the battleground. Get down here, we start buying. Keep buying. Keep buying. Blows out the highs, we stay long. That was in 2009, and it has yet to reverse. It still has not reversed. 1 agreed on prices higher. 1. This is what a winning trade looks like. It doesn't look like anything else. Nvidia. Inside 2 agreed on higher prices. 2 reversal, but then it changes to green here and then it starts going the other way. 2 up, so 2. That's a continuation. 2. It's a continuation pattern. 2 right? So if you buy it here and you're still holding, that's a winning position. And price is fractal, so it's always going to do the same thing. It's always going to, the best winning trade looks like this. It just keeps going. The worst ones, let me think, right? The worst ones are always going to look like Boeing. You buy it, goes up, a signal forms, and it breaks against you, boom. And then mother bar, destroyed. Boeing's cheap now, it's cheap now. Well, agreed on prices. It's not cheap anymore. This is what it's worth. So when we're trading intraday, like, the lower the time frame you go, the more it's going to be tricky on you. But look at the 15 here. This is not that difficult. Shooter, signal, boom, 2. And then 2. So you could reduce or exit and then get back in with more. Boom, 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 boom. Inside bar, down, reversal, get out. That was it. This is the winning position from here to here. And then you could go and do whatever the rest of the day. Or like we did today, you let it grind up. Boom, right here. The slight higher high to that, shooter signal, 2, get out. That's it. And yes, you know, you can try and exit it when it starts ripping back through here. Yeah, and just get out and be like, all right, I'm not going to let it come back on me that much. And that's fine. But we can see it on the 15 here. Inside, 3, 2, shooter, add, 2, get out. If you can keep it that simple, you're never going to get on and have a bad day. Your worst days are, I tried 5 entries, it didn't work. The spy's an inside day, it didn't work. I'll be back tomorrow. It'll work tomorrow. And that's it. That is all she wrote. I will take one last question. We're coming into market close now, so market's closing out. And you'll see we have a doji day right in the middle. What's SPY doing? Doing nothing, right? Doing nothing. But if there's one last, I feel like there's one last question, so I'll take it. But if you got nothing, then we're calling it a day here. There's no stupid questions. Stick to the 1 hour. Yep. The month, week, day, and 60. That's the other thing is when you're trading all 4 time frames, you must have them up. If it costs you $50 to buy it on TradingView, it's worth the money. Month, week, day, 60 minute. Because once you understand what a reversal looks like, you can do it on every time frame and you can line them up. Hit the like button. Yes, please. First time on the live. Awesome. Can I live trade one day? Yeah. I mean, I've been thinking about it. This is the thing. So during the day, my goal is to just accurately tell you what is the market doing. And then when I see the things where I'm like, yep, that for sure, then I say it. And that's always simultaneous break. So whenever I say simultaneous break, that's also what I'm taking, because I've sat here long enough to where I realized, like, if it's a simultaneous break, that's all I want to do. I don't want to do anything else. Perfecting the entries. All right, this is the last question I'm going to take. So the thing is you do not have to be perfect. There's a teaching from a guy I was listening to, and he said when it comes to like a job per se, or you could say an occupation, there is quality and there is quantity. Quality is like the minimum necessary requirements for you to work the job. So like you couldn't work at Pick and Save or your favorite, grocery store if you're paralyzed in a wheelchair and you can't pick up cans and bag groceries and use a cash register. Because the minimum quality required is that you can do those things. And maybe like minimum quality, like you must be able to lift 25 pounds. And then there's quantity. It's like how many things can you get on the shelf in the grocery store in an hour? So there's quality and quantity. With trading, it's the same thing. There is quality, which is how are you entering your position? Are you entering continuations and buying at the highs and then losing? That would be bad quality, because entering on continuations is a losing position overall. And maybe a better way to put it, it's a less probable way to make a winning position. Are you buying when prices are going down? Did you buy here and lose here? Losing position. So the quality of that is bad. You don't want to buy continuations or enter continuations, and you also don't want to buy when prices are going down. So what do we have to do? We just need to make sure we're entering on reversals. 2-2 reversal, 2-1-2 reversal. This is the minimum quality required to be a trader. Can you enter a reversal and hold until it reverses against you? Minimum quality. You can get more specific, right? You can exit at targets. You can add and reduce and do all this crazy stuff. But the minimum quality, can you buy here and sell here when this happens on the chart? Okay? And you can practice that. You can paper trade and you can practice that. It's not that hard. You just got to start to trust 2, 2, 2, 2, 2. It just keeps going. And then when you're doing this and you're like, well, I'm trying to get my entry too specific. The reason you're doing that is because the range is too small. Because if we know, like if we're trading, let's say we have a signal here, and this is how big the range is. You see how you almost have to squint to see what's going on? You're trying to perfectly time 1 penny in here so you can just get this little trade to this side of the range. So that's why you're so worried about this little, like I have to squint to see it. You're so worried about it. It's because the range is small. And the reason you're trading these small ranges is because it requires little faith. You don't have to have any faith to believe price will drop 60 cents because it does that every single day. It goes up and down 10 cents every minute, right? It doesn't require much faith to believe that happens. But the way price works is it starts really small like this, really small. And that's where you're going to make a little, and then it's going to get slightly bigger, and then it gets really big. And by the time it gets this big, you're already not trading and you miss the easy one. This is the easy stuff, right? So what you need to practice is seeing the big ranges. Like when you see it and you draw it out and you're like, oh, I see this little tiny broadening formation, right? It's a little tiny one. It grows over time. Like if we just extend this line out so you can see it, so if we can just imagine, do you see how much bigger it is over here versus over here? This is what price does. So the bigger the range is, the more likely you are to get the trade that does this gigantic move. And the less precise, the less perfect you have to be. And the more losing trades you can take. Because if you're trading, so if we go to the defense sector, and I'm just about to wrap up, so it's gonna take another minute. If we go to the defense sector and we zoom out, do you see how big this thing is? Look at how big this range is, right? Huge. Now, I don't want to explain levels of reclaim, but it's relatively simple. You have this big low and this big high. This is the range, the previous range. This low to this high. When price is above $24, it's going to 72. The way we time that, 2 down, 2 up reversal. You only have to be right 1 time. And then 2, 2, 2, 1, 2, 2, get out. That's it. You just outperformed every hedge fund in the whole world just by understanding this. Now, are you going to trade a monthly chart? Maybe, maybe not. But the same thing happens on a 1-minute chart. So it's going to customize itself to you and your goals, but you're going to do the same thing every time. So you can see, right? If we just zoom in and if we just block all the noise out. Down, reversal, buy, hold, and inside bar, we get more. Hold, targets hit, that's it. Not bad. And then you can do that however much you want. If you buy this and you're like, all right, I got my monthly position, we'll see how long this goes for. Go and buy more. You can just put a stop on it, right? You're risking like 4% if you're using the correct stops here. You just put your stop in there. Once it's already way up at 44 bucks, move your stops even. And then let's go and do that again on something else. Let's go to tech. All right, right here, hammer, right there. All right, we're going to do it there too. And then you trade all the way up here. Dow Jones, let's do it there. Dow Jones, get it in here. Now, maybe it would have stopped you out here, but you could always get back in. Right, it's still going. Right, so it's always the same thing. It always repeats the same way. You just have to increase your faith in the fact that the bigger the range is, the more likely it is to occur, especially if you have signals like a hammer or an inside bar. So I hope that answers your question. And you just need to simplify. Just sacrifice all the complicated stuff. Simplify it down to The basics, 1s, 2s, and 3s. That's all it is. And that's why most people don't even care about the strat, because they're like, a 1, 2, and a 3? What are you talking about? Data science, they don't care. Hedge funds, they don't care. No one cares. It's just too simple. Now, my live schedule, me and Sarah go live every week, 6 days a week, including Friday public streams. And then the difference between the disjoint channel tool versus manually drawing the broadening formations, it really doesn't matter. You don't even have to draw them. You just have to know. Do you see this level back here? Do you see this one? Do you see this? You just have to know when price is coming back above that. And since we give away everything for free, this is I already have the indicator. And the indicator draws it out for you in real time. So all you have to know in real time is that this is happening. Do you see this level? And then you see that? That's all it is. That's what the broadening formation is. We have a target. It's going up there. You see how that works. And then it takes it out, and you can see pretty good. So that is all I've got for you guys. I really hope you enjoyed the stream today. Share it with your friends. Share it wherever you want. I just want to help people understand this better. And I hope you guys have a great weekend. And again, check us out at stratalerts.ai. If you go to /premium-access, I can't guarantee it, but I do believe you can make back the $150. If you go and check it out, just buy it for the month and trade simultaneous break. Whenever we say that word, that's your go sign. But that's all I've got, guys. Have a great rest of your weekend, and we hope to see you next week in the premium room. Adios.